because your father is an investor, you becoming an investor was your independent thought or was it a mimetic desire?
Francis Cho pulled me aside the first day I started the fund, and he said, you're either going to be an investor who I think is a rifle shooter or a shotgun. And I was like, what do you mean? He's like, you'll either have a basket of stocks or you'll have a couple of big bets.
How many stocks are there in your portfolio?
We'll say 14 stocks.
And what's the percentage-wise distribution?
So right now, it's 50% US, 30% India, 10% China.
What did you buy in Euro?
It's LVMH.
Where did you lose the maximum money?
The most amount of money I've lost as a fund manager was buying Alibaba. Chinese regulator has 3 parts to their framework. The first is it good for the people? Is it good for national interest? And then, is it good for China's GDP? For the first time, I'm thinking of making an investment where I'll make it 5%. And when it goes to 10%, I'll start selling because it's too risky. I'll tell you the investment. It's TSMC. If I make TSMC a 10% bet and let it ride, let's say it becomes 30%. The day China decides to take Taiwan, it goes to 0. You know, Coke Studio, every season they come out with all the songs and everything. What I learned was when CCI entered Pakistan, Pepsi had control of cricket, and Pakistan is a dry country. There's no alcohol or anything else. So Coke was finding a hard time to figure out how to embed itself in the culture. They pushed Coke through music, and when we're listening to the songs and the, Rahat Fateh Ali Khan is, doing Afreen. I'm not really thinking about Coke, but you can see all the Coke branding and you're associating good feelings with Coke. I think my mom, she said if I have a daughter, I would want her to be raised in the US and not in India. From her experience, I've heard more positive things being a girl, an entrepreneur, a woman in the US than in India.
So you had $1 million in your bank account when you were 22.
Yes.
What's the best investing tool that you have used?
This is, I think, the best way to learn how to invest. So in the US, it's dataroma.com, and in India, it's Trendline.
What do you think an American girl can learn from an Indian girl and vice versa? Tell me about your highest conviction bet at this point in time.
My highest conviction bet is actually a private company.
Don't tell about NSE.
No NSE?
No NSE.
No NSE.
Okay.
NSE is my highest conviction bet.
Tell me your second highest.
My second highest conviction bet is in India. I wanted to make 10% of the fund. Peter Lynch talked about had he bought 8 different brokerage operators or financial services companies in the US instead of doing what he did, just investing in companies, he would have done better. So I said, okay, let's make it an Indian financial services bet.
What's the most ingrained memory that you had when you visited Charlie's house?
I mean, his house is like a movie. I think the one person who's maybe more private and quite brilliant is Pulak Prasad. He puts all of his investments on his website.
You having lunch with Warren. And I remember this one thing that you mentioned, that the most important thing that stayed with you from that lunch was the advice that the person you would choose to marry is the single most biggest decision in your life, and that had most impact on you.
I'm still not married, so if any young person wants to do something for me, they should send me a stock pitch.
Hi everyone, I'm your host Shivank, and we are part of the 01 Network by Zerodha. Together, we intend to bring you insights from the top thinkers in the field of entrepreneurship, technology, and investing.
So you had $1 million in your bank account when you were 22.
Yeah.
Why is investing so fun?
You make money when you're correct. So I think if you're someone with a little bit of an ego, or you're someone who really likes to be right, or you're someone who likes to theorize and play games and win, you're going to love investing. It's so fun. It's everything, right? It's the study of people, the study of history, economics. You're studying change over time. You're learning which businesses do really well, which ones don't do well. So if you're a natural operator or a business, like a CEO, it would translate well to investing too. So I think if you're just someone who likes to win and to be right, you would love this.
And I was listening to this thing, where you were writing so many cold messages, cold emails
Yes.
to people that you wanted, work with.
So not emails.
Then
I sent mail.
You sent mail.
I sent mail. I wrote my stock pitch. I wrote a letter to each fund. I hand signed each one. And I had my resume. And I mailed it 750 funds.
That's interesting. What made you not email and mail?
Because email is easy to delete. People delete emails. And if you send a mail, and you just send it so that it looks like it's important. So I didn't fold it. It was all flat in like a nice fancy envelope.
Oh,
so it looks important. And your goal is to get it past the secretary. So I addressed it to the head of every fund.
And wrote confidential?
No, I didn't write confidential. That would be a good thing. I should have done that. And I picked stamps. In the US, we have stamps that are themed. So you can have an Elvis stamp
Okay.
or Star Wars stamp or like a Mustang, the car. Okay. So I picked stamps, whatever was available at the post office that a 55-year-old white man would like. Because I figured the average age of a fund manager in the US would be 55, right? And I was only going for funds between 2 billion and 10 billion in size. Any larger, they would have formal recruiting. Any smaller, they wouldn't want to take an analyst. So that was the goal. And of the 750, I think only 10% responded. 90% don't respond. And most of the responses say thanks, but no thanks. A couple of them will do coffee chats. I had 8 interviews and I got 2 job offers. So of the 750, 1% interviewed me.
I think that's
really good.
That's really good. Yeah.
It's really good.
But you mentioned you figured out what kind of stamps would a 55-year-old person would like.
Yes.
What was the thinking behind that?
You want them to, you have very few opportunities in an envelope and 5 pieces of paper to impress somebody.
True.
Right? So I have a fun name. Monsoon is cool. So they might remember that. Then, stamps you can have a little bit of fun with and it shows a bit of personality.
Mm-hmm.
So I took an advantage to do that and not do prepaid stamps with just a number. It's some color, right? It pops out. I picked a big flat envelope that would get past the secretary. She might think, or he, it's mostly a woman. She might think, okay, we should get it through. And I did very fancy paper, thick paper.
That's really smart. That's really smart. So I've watched a lot of your interviews, right? And most of the interviews start with you having lunch with Warren.
Yeah.
And I remember this one thing that you mentioned, that the most important thing that stayed with you from that lunch was the advice that the person you would choose to marry is the single most biggest decision in your life. And that had most impact on you. Can you describe that impact to me?
I'm still not married. So I hope I make a good choice. But it's helped in dating where, it's technically the most important investment choice you make in your life, right? Because it's the person you wake up next to every day and go to sleep next to every day. So that dictates your daily mood, right? You can't dislike this person. It also would be probably the father of my children. So it would have to be a good role model to small children throughout their life. And, if anything bad happens to me, then they would be a single parent and that you would want them to do as good a job as you would do. So I think, and this applies to both men and women, the most important choice is who you marry. I think it affects women a little bit more because, and this is the unfortunate truth, is that, men in society are told they will be the primary salary earners, right? Income earners in the household for the most part. And women, they can supplement that. There are some women who earn more than their husbands. But for women who maybe don't have as many skills or weren't able to get the best education, marrying a man with a good education and a good job it's very important for what your life will look like. So I think when Warren was saying that, I was 12 and my sister was 11. And I think it's easy for young girls to get excited about the wrong boys. So I think it's important to be focused on the traits of like who would you want to, what traits would you want like your children to learn from? What traits do you want to learn from? And who is someone that treats you correct, treats you well, treats you like a human and an equal. So I think it's hard to find, especially as a woman with a career. I find that all my female friends struggle with this, to find the right man like that. But on the flip side, all my male friends, they're for them to date, they can usually find a woman who supports them and whatnot. But I don't think they struggle as much as my female friends in New York City. In San Francisco, the women have all the power because there's so few women to men. So there's more, I think the boys have a harder time there finding good women.
Oh.
Yeah.
When you evaluate company, there are certain kind of traits that you're looking at. When you are evaluating people in a situation where you have to figure out, is this, the situation is about marriage, right?
Yes.
How do you evaluate a person?
Oh, yes. Okay, so I think Buffett says the 3 things to look for in an intelligent person, or someone who will be successful, is high integrity, high energy, and high intellect. I think finding the combination of those 3 is pretty difficult, but the integrity actually comes. You can see pretty quickly how a person treats somebody, how they treat the people around them, what kind of integrity they have. Even the energy when you talk to them and how they converse with you, you can also tell, is this someone who's excited about their work and commits a lot of time to it, and, in their spare time, it's their favorite activity. And then high intellect, that might be maybe the little bit more difficult one, because I think sometimes charismatic people know what to say, right? They know what to say and how to talk. They know how to sell. And you can't really give everybody a quiz, and figure out if they're smart or not. But I think highly intelligent people can talk about basically 2 things. They can talk a lot about many topics or a lot about very few topics. And I think at the end of the day, you're looking for someone who's honest and knows themselves. So I think those are the 3.
Very interesting.
Yeah.
And, you mentioned that charismatic people have a gift of gab and they know what to say and when to say.
Oh, yeah.
And even when you meet promoters, there are some promoters who are very charismatic.
Yes.
You will feel like, okay, he's the god. He knows everything.
Yes.
How do you evaluate that charisma?
So when I meet promoters, I'm on high alert, because I know they're trying to convince me that their business is the best business and I should invest in their company. The good thing that happens, and what I'm looking at in India primarily when I look at equities, I'm trying to make sure that there's no fraud. Because in the US, we have rare cases of fraud, but in India, we have a lot of cases of fraud. So when I meet the promoter, I don't know, you get a weird feeling in your stomach. You feel like you can't trust the person, and it's hard to put into words exactly what it is. But there's this really nice book called Power versus Force, which tells us that our subconscious knows when we're being lied to. We can't articulate it, but we get a funny feeling. And I have had these meetings with these funny feelings, and I walk out the room and I think, I don't know, that just didn't feel right. Something felt wrong. And you know how to prompt the questions to test, like how would they answer this? And they might answer it not so bad. When I walk out of the room, what's most important in India is then you talk to your network. So I feel this is where I feel really blessed because of my father and because of my last, I worked at a fund in US that invested in India. Because of my network there, I leveraged them. So I asked them, what do we think about this company? I had this weird feeling. I don't know if I'm right or wrong. And they'll usually say, yeah, that was a fraud. I don't know why you took the meeting. Sometimes they'll say, no, it's totally fine. Like, it's not a problem at all. And they'll explain to me that, like, oh yeah, that guy may seem a bit fishy, but he's a sound guy. So I think for the most part, I have to leverage my network. I don't know for certain, but even if I feel funny, I won't make the investment. I'll follow my gut. And I think the integrity is really important, because in the beginning, someone might really impress you, and you may buy the equity and you may own the investment, and then 2 years they call you and they say something that just doesn't sit right. Then you exit. Then you exit the position, because it takes integrity is very important, right? They may have had sound principles when you invested in their company and you liked the promoter and you've done your due diligence, but the story may change in 18 months, in 24 months, where they themselves were tested and they took a wrong choice. So it's important, I think, to always stay alert. I took like a personality test when I was 19 or 20, and my skepticism was 90%. So I think I just naturally find it hard to trust people, hard to trust promoters. So I'm always, even when I make the investment, it's my favorite investment. I've owned it for years. I still will, when I meet them again, I'm still skeptical. Yes.
Is it very true for all female investors?
I don't know. I only know 2 or 3 other female investors. And I don't know if they're as skeptical as I am, or if I'm naturally that way. I think I'm skeptical because I'm naturally curious.
Mm-hmm.
And I grew up reading Nancy Drew, which is why the fund is called Drew Investments. So I've loved mysteries. I loved John Grisham novels. I'm obsessed with investigative journalism. So I think I approach investing from a very skeptical lens, and a lens where I'm always questioning. And I think that just comes naturally to me. Other investors I talk to sometimes come more mathematically. They might come in with more rationality, but I come in with questions. I don't understand this. Let's figure this out. Which gives you a good picture. It's like when you're solving a puzzle. I love puzzles. I love doing 1,000-piece puzzles. I do them on my iPad. It's the same thing. You're putting pieces together, so you have to ask questions to figure out and get the full color, full story.
So you started the fund at 25.
Yes.
So this is very interesting to me.
Yeah.
Can you lay it down?
Yeah.
Let's say, okay, I want to wear this thinking head. Let's say there is a young girl watching you.
Yeah.
Right. And in India also, there are very less number of, not only, men also, who started their fund under 30.
Yes.
Are you the youngest fund manager in the world?
No. There's definitely people younger than me.
Tell me a couple of names who started a fund, younger than you.
There's one friend of mine, Alex Bossert. He started going to Warren Buffett's Berkshire Hathaway meeting when he was 12. And he had been actively investing since then. And I think he probably was 24 or 25 when he started too. And I think he must be, I don't want to get his age wrong, maybe 34 now. And so I had talked to him when I was 23, 24 about starting and being young and convincing people. And I think the one person who's maybe more private and quite brilliant is Pulak Prasad.
Yeah.
And he doesn't do as many public appearances, but he puts all of his investments on his website.
It's written, the current and the divested.
And it's basically said, figure it out. And I love it. And he puts his exited positions, whether they were good or bad, you also have to figure that out. I've met every single company that he owns and has owned. And that's a very fun exercise. I would say aside from WNS and some of the blue chips, the rest are all very Indian. And I don't know how to explain it, but it's like you're going to your uncle's house for chai. When I meet the CFO or the CEO and like, Jyoti Labs, Ujala, that is core to being Indian. That, and I don't know, maybe he knows that, but I think he really picks businesses and you feel very comfortable with every management team. I've never had a bad feeling with any of them. Maybe that's because I know Pulak has already invested when I visit them. But you feel very comfortable with all those management teams.
What's the most unique thing that you've found out about Pulak's style of investing? I've read his book, What I Learned About Investing from Darwin. But what have you found after meeting so many of his portfolio companies?
They're all compounders. Mm-hmm. They're all, he could go into a coma and the fund would produce very high rates of return. They are, they're core to the Indian spirit, and they'll compound with India. And I think the macro trend that India will do well over the next, 10, 20, 30 years is part of each one of those stories. And what happens is a lot of Indian companies have that, but, with Jyoti, it's like, it's so core. You can't, like the white, crisp, kurta and the banyan is so core to being Indian, it's never going to go away. And other countries don't have that same cultural appreciation for like a white piece of laundry. I don't know. I think he knows that very well.
If you were to pick one company out of his portfolio that you also share in your portfolio, what would be?
Oh, I don't think we share anything.
Okay.
That might be my mistake. I think from his portfolio, I don't share anything. the fund I used to work at, Dalton Investments, we shared some investments with.
But you like Bullock so much. You like
I
his
like
investment
Bullock.
series, but you don't share any investments. Why is that?
I think the valuations are too high now for me to buy. But I keep an eye on them. I like his investments. I like those companies. I think Indian valuations for companies can be a little bit higher. And yeah, I think I would buy them if they come down in price. And I think maybe earlier this year some of them have, but I was just too busy looking at. There was too many things to look at. But yeah, I hope I share more names with him in the future.
Tell us about this is Mr. Lilu, right? You have had
He's the coolest. Yes.
a lot of people don't know about him.
Yeah. A lot of people, maybe in India, they don't know about him, but in China, he's famous.
What have you learned from him during the interactions that you had? What's the craziest memory that you have with him?
I mean, anyone that's a friend of my father's is like an uncle to me. So he's a girl dad. He's a big cheerleader. When I was interning at an endowment, when I was interning in India, he always knew what I was up to. And every time I'd see him, he'd compliment me and say, "That's so awesome that you're working on that." And very encouraging. When I became an analyst, he was very proud. He's like, "You're an analyst at like a pretty serious fund." I said, "Yeah, thank you, Lilu." And he's a billionaire, which is pretty awesome that he would give me that compliment. I think the one thing I've learned from Lilu, it's the same thing as Pulak. They do not sell.
Mm-hmm.
There are positions Lilu has bought 20 years ago, he has not sold. And it's probably the biggest difference they have to my dad, where, he'll exit positions and he likes to put positions that are 10% of the fund. They'll put a small position, they'll let it stay there. Even if the fund gets so big, they'll let it sit. And it becomes, negligible to their performance, but they don't sell it. They keep it in the fund. And I think I'm trying to do a little bit more of that.
The reason for them to not to sell is also because they have so much money, right?
Yeah.
They don't. If they find a new opportunity, they don't need to get an exit from their previous investments to put in another opportunity, right?
Yeah, but technically to make the high returns, you need concentrated bets.
Right.
So if you have a lot of little positions, it could pull down.
It won't move the needle for us.
Yeah, it wouldn't. It's not worth the time to monitor that position if it won't move the needle. But he still keeps it. And, I like that. I don't know. I think it's something that's different from most other formal investors. Most fund managers, what they do is, or most formal funds is, they'll make a position 3 to 5% of the fund, nothing more. Then once it becomes 10%, they'll start selling. And they'll never let it become more than 10%. Some funds go even further. They'll only buy at 2.5%, 3%. Once it gets to 5%, they won't let it go beyond. They'll sell to keep it under 5%. You are losing on a lot of compounding that you shouldn't be. And for them, it's risk and they're mitigating it. And they have fancy clients that they can't lose too much money for. But it's probably the opposite way that you should be investing. And so for everything in my fund, I tell my investors it's going to be 5 or 10% and we'll let it ride. For the first time, I'm thinking of making an investment where I'll make it 5%. And when it goes to 10%, I'll start selling because it's too risky. This is the first time. And I'll tell you the investment. It's TSMC. And I'm only thinking about it. I haven't made this investment yet. And my understanding of TSMC is if China takes Taiwan, TSMC will go to zero, right? So if I make TSMC a 10% bet and let it ride, let's say it becomes 30%. The day China decides to take Taiwan, it goes to zero, okay? So what I initially said was, I'm not going to buy TSMC because I can't write that risk. I don't know.
When will it happen?
We don't know. Yeah, we don't know, right? Like, nobody knows. But they keep saying they will take Taiwan. It's their mission, right? They want to take it. So what I said was, okay, I think TSMC is an incredible business. It's a compounder. Maybe I'm missing out by not investing in it. And I've tried to buy other chip makers. Nobody's as good as TSMC. That's just what it is. So I decided, okay, if I buy TSMC, I'll buy it at 5%. When it becomes 10%, I start selling. So I borrow from what those formal fund managers do. There's something to learn from everybody, right? Then I said, okay, the day China takes Taiwan, we just lose 10% of the fund at most that day. And I can sleep well at night knowing that.
So you've made comfort in.
You need to sleep well at night. That's the
Makes
most
sense.
important thing. Yeah.
And what is top of your head right now? So it's very interesting that you started this fund and right now you're at 50 million. What's your vision with this? And do you also see that, sometimes compounding is easy when the base amount is low and it becomes hard when the amount becomes big? Is it true? Do you subscribe to this?
I think I'm not big enough to answer that question yet. But yeah, technically, once you start managing billions of dollars, there's fewer things you can invest in. But I'm not the type of investor who, because I'm small, I'm investing in small caps because they have big upside. I find the small caps, I don't know, a little bit, I don't have much comfort with them. Sometimes I'll pick one or two if I really think it's a good company and it's really undervalued and the market doesn't understand, and I'll move against the tide. But more often than not, I'm drawn to the winners, the bigger guys who eat everybody's lunch, and just keep winning. I like things that compound, and there are some unknown companies that can compound at high rates of return over the next 20 years. But I find I also like the bigger companies, right? And I get a lot of criticism that I'm a small fund and why am I buying a large market cap company when, the larger investors can't invest in these small companies and do small arbitrage and make money. And I'm like, I don't know. I like both a lot. But yeah, I think if you're Warren Buffett, there's very few things you can invest in. And if you're me, you can invest in anything, which I like. I can invest in anything I want.
Tell me about your highest conviction bet at this point in time.
My highest conviction bet is actually a private company.
Don't tell about NSE.
No NSE?
No NSE.
No NSE.
Okay.
NSE is my highest conviction bet.
Tell me your second highest conviction.
My second highest conviction bet. Okay. My second highest conviction bet is in India. It's the financial services. So I wanted to make 10% of the fund Edelweiss Financial. And I love Edelweiss Financial. I love Ashish Shah. I think he's an incredible operator. I think he's really good at going from incubation to launching products. And he's going to unlock a lot of value with all the 7-8 businesses they run and IPOing each one. So that's a business model I understand well from a Western investing mindset. I think he's a smart entrepreneur. I did not want to take that much risk with the fund by putting 10% into Edelweiss because of, the name is a little bit tainted in the Indian market. I think unfairly so. I think Rajesh does not deserve that viewpoint. But Peter Lynch talked about had he bought 8 different like brokerage operators or financial services companies in the US instead of doing what he did, just investing in companies, he would have done better. So I said, okay, let's make it an Indian financial services bet. And I included HDFC, Motilal Oswal, and 361 Wealth Asset Management. I felt these were all high quality companies. I mean, HDFC is a large market cap, but it's a incredible bet on the growth of India, right? It will do, as India grows, HDFC will grow. And Motilal Oswal is the brokerage, right? It's the highest number of brokerage accounts in India. And then 361 Wealth Asset Management is the wealth asset management for the ultra high net worth in India. So I felt like, okay, with Edelweiss and these 3 other players, I can make a 10% Indian financial services bet like a bucket. I see it as one investment and I have to do homework on each one. But I think over the next 10 years, all 4 will do really well.
For audience who does not know this, so your highest conviction bet right now is NSE that you say.
Yes.
And if you want to understand about NSE, you can just go to ValueX 2025.
Yes.
You can see the thing.
I talked about it, yes.
And I was, lucky enough to be there in the room. But I have 2 questions on that bet.
Okay, good.
Number one is, let's say if somebody watches this right now, and if he wants to or she wants to invest in NSE, right now you'll get this unlisted share at around 2,300 rupees price.
It's expensive.
It's expensive.
Yes.
Are you willing to get in at this price?
Yes.
What makes you so bullish about this?
Okay, so
what makes you think that the stock right now is not overvalued?
I mean, 2 weeks ago it was at 1,550, 1,600 rupees a share. So about 30 times earnings. Now it's shot up to 40, 45 times earnings. Well, the first is it trades at half the valuation of the Bombay Stock Exchange. right? So not that the Bombay Stock Exchange should have such a high valuation, but it is half the valuation of the BSE. Part of that is because the regulator is coming in and driving more volume to BSE, which is why BSE is growing. I actually think with that news, NSE should be going down. But no, everyone is excited and buying NSE shares. The main reason why NSE is a good investment is because it will never go away.
It's like a toll bridge.
It's a toll bridge, but it's also like a cockroach. It will survive a nuclear war. Okay? So every single trade that happens in India has to go through Bombay Stock Exchange or National Stock Exchange. The regulator is very clear that they want two players that are more equal. So NSE will have volumes go down, which is fine. But what will happen in India over the next 10 years is we will see people moving into the stock market. Yeah, into equity. I don't like how much of India is invested in derivatives market. I think the average Indian is not making the right decision by investing in the derivatives market. I think they're gambling and they're speculating. I think India did a study to see, I think the Indian government did a study to figure out what is happening in the derivatives market in India, and they saw the average Indian was losing money.
And that's why they came out with all these new
regulations, which I actually fully agree with. I think India is totally correct to make these rules. We should see short-term pressure on NSE, and I actually think NSE price should be coming down, not going up, but it's going up because people are excited about the IPO. NSE and BSE in the next 10 years are both incredible investments at whatever price right now. Okay, they will compound because India is going to compound, because the financial market will compound. And what's going to happen is foreign players will also enter India. So with Gift City, they're going to come in and they're going to start trading through NSE and BSE, and they're in a tax advantage way. So you're going to see large institutions around the world investing in India, and this is straight dollars to NSE and BSE, both of them. Both will do really well.
But you're saying it's still not overvalued?
It's not overvalued because if it's growing at, 20, 30, 40% over the next 10 years, it's peanuts. We're paying, very few pennies for like $1 of future growth. It's going to be awesome.
Tell me your highest conviction bet outside India.
Oh, outside India?
Because a lot of people don't understand, things. So I understand India, right? So I can't say that I understand. So I try to understand India.
Yes.
But I have very less understanding about the global markets and the emerging economies, right?
Okay.
And I'm trying to learn. So can you help me explaining your highest conviction bet outside India?
Okay.
And maybe open the doors for a lot of people.
Okay. So the first investment I ever made, I was 16 years old, and I saw Warren Buffett had purchased Visa. So Visa is a credit card company it's headquartered in the United States, but they actually make cards globally. And what I had read about Visa was every time you swipe your card, they make a tiny percentage of that transaction. Just like NSE, it's a toll bridge. It's another toll bridge. And, Buffett loves these toll bridges. So he had bought Visa. At the same time, I saw MasterCard also as exact same business model, almost the same market share at that time, but it was cheaper than Visa. So I didn't know much at 16. I knew about moats because of my father, and I'd seen Buffett buy Visa, and I had some babysitting money. So I purchased MasterCard. It did well. In 3 years, it tripled. Okay. When you own a stock, you learn more about it. So then I learned with credit card companies, Visa and MasterCard, they don't even pay for the card. The bank pays for the card. So Bank of America or JP Morgan Chase pays for the card. So it's 100% gross profit. There are almost no businesses in the world that are 100% gross profit. They don't even have to acquire the customer. The bank is doing that. They're just the security software. So that's why, Microsoft and Network Effects and all these tech companies have these awesome valuations because they have very high gross profit. What I learned then was Visa and MasterCard now trade at very high valuations. And I saw American Express was trading much cheaper. And American Express is what the very wealthy people in the United States use as their credit card, and upper middle class and now middle class. But you basically have to have a pretty high income to have an American Express card. American Express pays for the card. It's not like Visa and MasterCard. So they pay for the card, and they give their users Hilton points, Marriott points, Emirates points. They fly them to, wherever. And what they do is, what I saw was for every $1 of profit, 60 cents of that goes back into keeping the customer. So it's different now, right? So now it's way less gross profit, but they're paying their customers 60 cents to stay. So, if you go to a concert, you'll get a better seat through American Express. If you want to go to a tennis match, you'll get a better seat through American Express. So they're creating a good experience for all the cardholders, which builds a lot of goodwill.
And these are all the wealthiest people.
These are all the wealthiest people, right? Wealthy people in America. And so American Express trades at a huge discount to Visa and MasterCard. And I think that's not right because they have a much better customer base. They all pay their, payments on time. And and they're keeping them in the loop, and they all stay in American Express. They don't leave. What happened in COVID, which is really cool, is it went to 7 times earnings.
Insane.
Okay, because everybody thought American Express is a travel card, right? And travel is done. So everything travel was undervalued, okay? And so American Express was sold off widespread by the whole world. And if you think about it, for every $1 of profit, that's 60 cents goes to their customer. At this time now, it's 67 cents goes to their customer. So if they're paying 67 cents always, and it's mostly going towards concerts, flights, and hotels, and in COVID, none of that is happening, right? Because everyone has to stay home. And in the financial crisis, if you study it, people kept their credit cards open. They didn't close their credit cards. They kept, even if they couldn't pay the bill, they'd pay the minimum to keep it open, okay? So we're going to see people continue to spend, but not redeem for flights or travel or concerts, okay? So now that 67 cents that they owe their customer for every $1 spent, the liability is gone, okay? So now this is the interesting part. So they don't have to pay that 67 cents. It's now created much more cash for them, okay? So they did a couple of things which I theorize. The first is they could now negotiate better deals with all the travel and okay. They could get way better seats at a lower price to give to their card holders later when they needed to, okay? Which they did. The second thing is that they have a small business lending program. So they pumped more money into that, which give them a higher return on their investment, okay? And then what happened is people kept spending. Not only that, they were spending like crazy in COVID because everyone's sitting at home, online shopping. They were all buying stocks in the stock market. Everyone was bored doing whatever at home. Amazon, if you drove on the highway for an hour, you would pass 40 Amazon trucks in the United States because people were online shopping like crazy on their American Express card. So what happened is Amex grew at an exponential rate. It was actually the wrong investment that the market said. They thought, oh, travel card, that means nobody's traveling. It was like, no, this is a great opportunity for Amex to grow themselves. And it's still undervalued. It's still in the teens. It's still a high conviction bet. It's one of Warren Buffett's biggest bets too. He owns American Express. And it's an incredible company. So it's one of my favorites.
Why do you see people, sometimes underestimating, simplicity and overestimating complexity? Why do you see this thing happening?
Oh, because people think that they're different and unique and that everyone's Einstein and they can reinvent the wheel. You should just clone the wheel. That I got lucky from my father. I learned to just copy what very smart people do and do it perfectly and you'll do very well.
What is one mental model of your father that you find some restraint in following?
Oh, wow. Some restraint in following. None.
None?
I think he's totally correct about everything, which I don't know if he'd like to hear, or maybe he'd really like to hear, but I can't think there's anything he's been wrong about. The one thing we argue a lot about is the price to pay for stocks. So he likes to say I pay up for companies and I like good companies. So I'll pay up and he can't pay up. And then my critique of him is that because he can't pay up, he picks companies that I think aren't as high quality, but they're cheaper. So he gets a better return, right? In a shorter amount of time. But what both of us agree on is that we're looking for long-term compounders. And a lot of people ask how we're different. I think our portfolios, I don't think they overlap more than 10% now.
Really?
Yeah. And maybe at most in the past it was 20, 25%. And what I like to say is that we're two artists trained in the same style of art with totally different paintings.
Is this a conscious decision of yours to not to overlap your bets with him?
No,
Or
it just happens that way. I love all his investments. And there's one or two that I have bought. And sometimes when I find a company, I'll tell him about it and we'll talk about it. And what our agreement is, if he finds it first and talks to me about it, I won't buy till he's done buying. If I find a company that I bring to him and he likes it, he'll buy after I'm done buying. So the person who brings it gets the better price or the first price. Sometimes the price goes down. So that's our handshake agreement. But yeah, we don't have much overlap.
how do you think your investment, what are certain things where you are very different that you have an edge on than him?
I think I like quality. I really go for quality companies. So I bought Costco at 40 times earnings. And that was the price because when I started the fund, that was the price of Costco. And I wanted Costco in the fund. And I knew it would compound forever. Nobody would have bought Costco at that price who's a value investor. And there's a group of 30 value investors I hang out with once a year. And they were making fun of me. All men, okay? All older than me, all men. They were kind of poking fun of me. And I just said, it's fine. You can make fun. And one investor said, yeah, but you had a really great return from it. So maybe you were right to pay that price for it. And if I had told my father at that time I was buying it, he would have said, you can't pay that price for that. Wait for it to come down. I was like, it's never going to come down. So I think I will pay for quality if it means I don't have to think about it again and it can just compound in the fund. I will do that.
So I have two questions, which is very unique. So think of an American girl, okay?
Okay.
What comes to your mind when I say the word American girl? Describe me the qualities.
Oh, of an American girl.
Yeah.
Okay. She probably played sports in high school. She's independent. She's got a lot of friends. And she's probably just a good person. Yeah.
Perfect. Now, think about this word when I'm going to say.
Yes.
What do you think about an Indian girl? Describe the three qualities.
An Indian girl is really smart. She probably did not play sports in high school, or it's not as common. She's probably a very family-oriented person. And she probably has a really fun personality.
What do you think an American girl can learn from an Indian girl and vice versa?
The American girl can learn how to be family-oriented from an Indian girl. And an Indian girl can learn to be more selfish from an American girl. I think it's important for women in India to be more selfish.
Why do you think so?
I think where in India, women are probably raised more to cater to the family a little bit more, and they might lose sense of who they are or what makes them them. And I think if you graduate school, you get married young, you don't have that much time to figure out who you are before you start a family.
Mm-hmm.
And I think in the U.S. in the major metro areas, women have that opportunity more than not always.
The reason I ask is, your father was, had his childhood in India, and you had your childhood in America.
Yes.
What does that do to a person, right, of that archetype? That was the reason I was very curious about.
Yes. Well, I was raised in an Indian home in the U.S.,
Mm-hmm.
so I had a mix of the culture, right? So I'm also very family-oriented, like most Indian girls are. But I'm also an independent thinker.
Mm-hmm.
And I challenge my father and I challenge my mother. And yeah, I think I grew up with both a little bit. I like to think I grew up with the best of both. But yeah, in our home, studies were the most important versus on my street, that was not what was most important in most of the American girls' homes. It was do your best, not be the best.
Very interesting. Very interesting.
Yeah.
Tell me about what's the most fascinating factory that you have visited?
Fascinating factory in India.
Yeah.
Oh, Pratap Snacks in Indore.
Okay.
That was so fun because I like the kurkure. And it was the most fun. We got to watch how it was made. I love Indian snacks. There's nothing tastier than an Indian snack. Even all my American friends love the taste of Indian snacks, the spice and the masala. It's so nice. So I think I just had the most fun in that factory. And they put those little 1 rupee, 2 rupee balloons.
Yeah.
And they talked about in the marketing and how important it was for like in India for the kids to have a little toy or something. So I don't know, that was the most fun.
Do you still hold Pratap snacks?
I actually never held Pratap snacks. So there's many factories and companies I visit that I don't invest in.
Reason is?
We're learning, right? I'm a student of the world. I meet all these companies and I learn about how they make money, how they lose money, how they invest their money to make more money, how is it aligned to the fund manager. And what comes from it is I build a better
Framework, mental
to
model.
invest. Yeah. So and even what Buffett and Munger do is they read every day. They would read about companies, not with the point to invest, but to learn.
Most fascinating global company or global factories that you have visited?
Oh, Maotai in China.
I know the story. Tell me the
Oh, another factory. Well, in the US, I don't really visit factories. In Turkey, it would have been the Coca-Cola bottler, which is Coca-Cola Isaac. And that was really cool because CCI in Turkey, Coke Studio?
Yeah.
Every season they come out with all the songs and everything.
Very good
It's
song.
the best.
Yeah.
And you've grown up listening to it. It's the best study music, right? So through college, through high school, I used to listen to Coke Studio. When I was in CCI, we were watching the bottling and everything in Istanbul, and it was cool. But what I learned was when CCI entered Pakistan, Pepsi had control of cricket. And Pakistan is a dry country. There's no alcohol or anything else. So Coke was finding a hard time to figure out how to embed itself in the culture. And they picked music.
Yeah.
And that was, they pushed Coke through music. And, when we're listening to the songs and Rahat Fateh Ali Khan is, doing Afreen. I'm not really thinking about Coke, but you can see all the Coke branding and you're associating good feelings with Coke. And I learned it was the CCI team in Turkey that had come up with that.
Very interesting. So the reason they have Coke Studio was to promote the thing in Pakistan.
Yes, to promote Coke in Pakistan.
Very interesting.
We just think we're listening to good music, but it's to associate good feelings and good music with
happiness. And very interesting.
Coke.
Very interesting. Tell me, what's the kindest thing that someone has done for you?
I think the kindest thing would probably be my parents choosing to raise my sister and I in the U.S. Is probably the kindest thing they've done because they were deciding before they had kids whether they should move back to India and build a career there or stay in the U.S. and build a career here. And, they didn't come from family businesses that had a lot of money in India. So they would kind of be starting afresh either place. And I think my mom she said, if I have a daughter, I would want her to be raised in the U.S. and not in India from her experience. And people have said some, terrible things to me being a young woman in both U.S. and in India. But I've heard more positive things being a girl, an entrepreneur, a woman in the U.S. than in India. So I feel grateful that they made that choice 30-something years ago.
And you would go ahead and raise your kids in US?
Oh, I think I would raise my kids in the U.S., but I also want to take them to India and to other countries to explore the world. But I think, I grew up going to rural India from the age of 10. Because of Dakshina. So I felt like I had a really good feeling for what life in India was like too. Not for the middle class and the wealthy people, but for the lowest class, right? And I've seen so many villages in India. I've been to so many homes. I don't even know if you can call them homes. They're so small. I feel like I've seen the real India extensively before I turned 18 that I think even many Indians in India have never seen, right? So I feel grateful for that. I'm going to also give that to my children. But I think I would feel, my hope is that India changes so much in the next couple of years that I feel comfortable raising my daughters there.
I find it very interesting that you choose US. But help me understand, just imagine a thinking activity. If your parents would have decided that will raise, you
Yeah.
in India,
Yeah.
what do you think? How would your life would be different?
I think I would have still, I don't think it would have changed who I am too much. I think my parents still would have been very encouraging, very business minded. I think my dad would have still been a girl dad. And I think my mom, because my mom was an engineer, she was also one of one girl out of 100 men in a class. So she was a forward thinker. And she would have been a good coach even in India. And I think I would have performed well. I think it would have been more likely for me to become an engineer or something in India because both my parents were engineers when this happened. And my dad didn't become an investor till I was 4. So, he was investing, but he set up the funds when we were in the US and I was 4 years old and my sister was 2. So we had already set up our life here. But I think if I had been in India, I think I would have been a very different kind. I would have been a different girl from most, I think, Indian girls. I think I would have probably done sports. I always felt a need to be different from everyone around me growing up. I think maybe a lot of people did. So yeah, I don't know.
Got it.
It's a good idea. I don't know. It's a good question. I've never thought about it properly. But I think I would have still been independent and career minded. I think maybe I wouldn't have had as much support from the people around me that I have here. I mean, my whole community, all my teachers, everyone here was always supportive.
And which is your favorite
Yes.
podcast of your father, of Monisa?
Oh, the Sean Puri one.
The recent one or the previous one?
The previous one.
Okay.
I really like that one. Even the recent one is good, but the previous one, I felt like it was the first time in a podcast people could see what he was really like.
Mm-hmm.
He has all his one-liners and zingers that catch you off guard. And I think he's a very playful person. And I think it really came out in that podcast.
Why do you think that came out in that podcast?
I don't know. That I don't know. I think he just maybe something about Sean's question or Sean's energy with him that me worked well with him.
Very interesting. And what's the second best speech? I'll tell you, I've watched every single speech of Monisa. And there are a lot of speeches.
Yes.
And in every speech, he will tell some resource, which is very interesting. So
something that he always tells some nice story.
Nice story. And for example, in last speech that I was watching, he mentioned about this, speech of Charlie Munger.
Yes.
Which is around 24 biases of human misjudgment.
Yes.
I just heard that, at least thrice. Every new thing he'll tell us about new book. Of course, there is a lot of repetition.
Yes.
But which is your favorite speech?
Oh, I think he used to give it a long time ago. It was about blue stamps.
Oh.
You know which one?
Yes.
This must be 7-8 years ago.
It's on his channel also.
It's on his channel, yeah. But I think that one is really nice because it just talks about how, incrementally these small things happen and they had these big purchases at Berkshire. I like that one. And then, this one he gave to my high school, but it was on the art of compounding. It's one of his first videos. He has this very nice slide show, and he quotes Swami. I'm not going to mispronounce it.
Vivekananda.
Vivekananda.
Yeah.
It's very hard for me. Yes.
No worries.
And I think take one idea, take it seriously, devote yourself to it. These are very Indian principles, and he makes it available for everybody.
And also, I think that in that video, there's a very good background music of Slumdog Millionaire.
Yes, it's very nice to listen to.
It was very nice,
Yes. And he has the chess piece board, I like that one. Yeah, so those are probably my 3 favorites.
Because you mentioned the chess piece thing, he mentions in that thing is that Warren Buffett is on the 18th square.
Oh, yeah.
What square are you on?
Oh, my gosh. I'm on, was it 1, 2? I don't know. I'm probably on square 2.
Okay. So you've doubled your money twice.
Yeah, I'm very early in my career.
Mm-hmm.
And what happened for me is because of my parents, they had created an account for my sister and I that they put the maximum amount you can put every year that's tax-free, and they let it compound. And so it had basically become about $1 million when I was 22.
Wow. 22.
Yes. And I did not want to touch it. And I was like, this doesn't feel like mine. And And both my parents kept saying, it's there for you to do something. And it's not enough for you to live off the rest of your life. So go do something. And that was even growing up, that was always the point of that account. And I think I'd set up my account to trade in India when I was working in India. And I had only bought Nifty 50, $10,000 because that's what I'd earned. And I had put it there and I'd saved it aside. When I left that job at Dalton and I started working at Coral Labs, I could finally invest my own money. And I did not consider that account to be my money. I always kept it in my mind mentally, it's separate. And, I told my dad, I'll invest in these 2 Indian companies. And I told him 10,000 each. He said, no, this is where he's a girl dad. He said, no, take the account and make the bet. Okay. I said, I can't, it's not mine. It's yours. And he said, it's not mine. It's for you to do something. Go play. So the bets that I wanted to make 10,000 each, I made 200,000 each. And it did well. The 1 million turned into like 2.5 million.
That's great. What were the bets you made?
It was Edelweiss,
Okay.
Piramal, and I think Mautai was one of them. But I had American Express. There were multiple companies I had invested in, but the big bulk was Edelweiss and Piramal that had done really well. And that's what really gave me the confidence to, start the fund and just start young and see what happens and just take a bet on myself.
Because you were in this dilemma of, not using the money that your father has saved for you.
Yeah.
I have a lot of friends which are born in very good family and which have this question, So for example, there was this friend of mine who just graduated with me and he was like, he wanted to visit Europe.
Mm-hmm.
And I was like, you should definitely do this, right? And he was like, yeah, I know that I can afford to. I can go to Europe, but I don't feel like taking, doing that on my father's money. So I'll probably delay this gratification and earn.
Yeah.
And my point was that if you have a leverage, why don't you use that leverage?
Yes.
And if you're so cautious and if you're so conscious and you are appreciating this fact, I like that you're appreciating this fact that you're understanding that this is not your money and your father has saved for it. But why don't you leverage it? What will you say? What will you advise to a person like that who is facing the same dilemma that you were facing during that time?
I still face it. Okay, so I view my money in 2 buckets. Okay, I have what they gave, and then I have what I made. And what I've switched my mentality to is the initial amount they gave me is not from my good doing. Okay, it's not because I haven't done anything to earn that other than winning the ovarian lottery and being, born into this family. What I've finally learned to give myself credit for is the gain I made. I made the correct bets. I've also lost money on it. So all that gain and loss above, I consider to be mine. The one thing I do not do is I do not use that to pay for any expenses. So I don't allow it to pay for any trips with friends. I don't use it for any food or anything like that. All of that has to come from what I earn because that's really what it is, right? It should come from there. What I do use that account for is I use it to set up my funds. So in the US, to set up an investment fund costs about $50,000 a year. And after a couple of years, you can recoup the money back from the performance fees and you can reimburse some accounting fees and whatnot. So I use it as startup money, but I put the money back. So that account, I make sure I don't touch it for anything other than for me to try new things that I think would build my business. And that's for me. For people who, want to travel to Europe and stuff, I would tell them it's your personal comfort level. And if you feel guilty taking it, don't take it. If you wanted to travel on your own money, travel on your own money. Wait to make that money and travel. I think that's a good thing, and I think you want to protect that nest egg. So I've made it a point where that thing is as best as I can untouched.
And what have you learned about money while growing around it and not through books?
Oh, okay. So what I've learned is, if someone close to you needs something or you come into dire times, you use the money. You're not stingy. So that comes from my family. So my great uncle and aunt, anytime anyone in my family came into hard times, they were there to help. So like when my grandfather went bankrupt, when my dad and uncle were in the US for college, my great uncle stepped in and paid for everything. And I spent 6 months living in Mumbai with my great uncle and great aunt, and I talked to them about like, why did you guys step up when nobody else in the family said? And they basically said, when we started our family and we had kids, and we said, you know, we're just going to have 2 kids, whether it's boy, girl, girl, we'll have 2 children. We'll take care of their expenses. Anytime anyone in our family needs any help, we will help if we can. And they did. They're, you know, they've been married 50 years and they've done this dozens of times in my family. I've watched it each and every time. Sometimes they, you know, now my dad steps up when people in the family need something. If it would really help the family, he will help. And I think that's the one thing I've learned at home is don't, you know, help your family. Don't be stingy. I think for things like education, you pay. You know, like your nieces and your nephews and your kids, you pay. If you can't pay, you pay. And I think leaving young people with a large amount of debt is not right for a young person if someone in the family can pay for it. It's probably what I've learned from money that's not investing that I think is important.
Mm-hmm.
I also think the main purpose of money is to become independent. So you're not dependent on anybody. So I think for women primarily, you know, having money is very liberating. So I think these are the lessons I've learned.
Mm-hmm.
And I'll learn more, right? So that's for now.
Tell me, what is one problem in your life or business that you would pay a young person to solve for you?
Yeah, I love reading stock pitches. I think you always learn something from it. So I think if any young person wants to do something for me, they should send me a stock pitch. And I try my best to always give feedback.
Mm-hmm.
Whether I agree or disagree, I'll always send back feedback. So that's what I can do for them. But I wouldn't pay for that. I think that's just, it's fun to learn.
Mm-hmm.
So I don't know what I would pay for. I do everything myself.
Okay.
I do all my operations myself, all my like legal work. I deal with my legal team by myself. So I think for the most part, I
Got it.
I do everything. Yeah.
What's the best investing tool that you have used?
The best investing tool I've used. Okay, so this is, I think, the best way to learn how to invest. So in the US, it's dataroma.com. And in India, it's Trendline.
Trendline. You see the best portfolio.
You see the best. And so what I've done, and I think anybody can do, and I think the best age to start is like 19. I think 16 you can start too, but maybe in college is the best time. And what you do is you study what the best investors own. Then you go to Value Picker or valueinvestors.com and you read, why is it a good investment? And that basically gives you a good idea of what that investor is thinking. Now everything's changed with AI. You can ask ChatGPT, why did, Warren Buffett buy American Express in this year? And he'll explain exactly why. He'll tell you about the crisis and the price he got it at and what he was able to do. And it's amazing. It's an amazing tool. And if you can prompt it properly, it can probably do it really well. And you can upload documents and it'll tell you what it's saying. And it's incredible the speed you can learn at now versus 3 years ago. Literally, the whole thing has changed. So I think anyone can be a really good investor. I think the best tool is to look at what the greats are buying and why they're buying it.
Is there a specific website that is very underrated, but it helps you a lot? The context for this question is,
Yes.
as a fund manager,
Yes.
you have access to so many things
Yes.
that a retail person or a young people does not have.
Yes.
What are those things that you have access to
Okay, yeah.
that you believe are so powerful
Yes.
that a young person should work hard to subscribe to that?
Yes. So what's funny is I don't have a Bloomberg.
Mm-hmm.
And I don't use any of those. I just got AlphaSense, which is expensive. It's $14,000 a year. I don't know if I'll renew because I get a better experience on Google
Mm-hmm.
and annual reports. And that's what I love so much about public equity investing is that all the resources you need are available. They're not behind a paid wall. You don't have to pay, $100,000 a year for a license. You can find everything online and you just have to use your brain, right?
Mm-hmm.
Your brain is the most expensive tool. So I stand by that. I think those are everything that's available for free is the best. But I think with AI, and you can do a lot of free queries. You can learn, you can understand it better. But I do like AlphaSense. I just don't know if I'll renew. That's the one thing I have that I pay for that is expensive and that maybe you want to work hard for. But I don't know. With all my investing, all my time is on Google.
What's your favorite Korean drama?
My favorite Korean drama. It's probably the first one I watched when I was in 7th grade. It's 7th standard. It's Boys Over Flowers.
Why do you like that?
I don't know. I think it was just juicy gossip, and I can't remember the plot. If it was rich boy, poor girl, it's like Bollywood. It's the exact same thing.
Very interesting. And let's do a mental exercise again.
Yes.
Let's say a genie comes to you
Okay.
and asks you, what is something that you really want, but you're not getting it? And whatever you ask that genie will be given. What would you ask?
I think I live a life of total privilege. I don't think there's anything more I could wish for.
Got it.
Yeah.
Tell me a mental model
Yes.
that you have recently picked up in life, which has either improved your clarity of thinking or your quality of life.
Exercise every day. That's it, because that's improved. Because what I didn't really play sports in high school, and in college I maybe went to the gym very rarely. After college, my first 2 jobs, I was too busy to work out every day. I could maybe work out once or twice a week. What's changed for me now, because I manage the fund and I'm not trading very often, is I can work out 4 days a week, 5 days a week. I can work out every day of the week if I want to. And if I do that frequently, my clarity of mind is very high. The other thing I did after college is I quit drinking. I'm basically sober. That also gives me very strong clarity of mind. So I think I've been maybe for the last 6-7 years doing this, where the most important thing is that I preserve and maintain my clarity of thinking. And so what's happened is that if there are people in my life that I'm friends with, or I feel like they make things unclear for me, or I'm doubtful, then I actually remove them as friends. I still, I'll always be there for them, but I just don't talk to them as often. Same thing with alcohol and drugs, and with people and social activities. I only pick the ones that improve my clarity of mind. Even with the trips, I used to go on all kinds of trips with friends all the time. Now my only trips are work trips and weddings, because everybody in my life is getting married. So I'll go to a lot of weddings because it's for people I care about. But if I don't care about that person, I don't go to their wedding. So I think that comes from Munger, and I think I probably grown up with my parents saying only surround yourself with good people, whatever. But I only started taking it seriously more recently, where I started to think, this is someone that should not be in your life, because they're not acting at the highest levels of integrity. You wouldn't be doing the things that they're doing. So don't reduce your time with them. And with the people who, live their life the way you want to live your life, you increase your time with those people. So I think that's a powerful, more recent thing I've been doing.
And this is one thing. I went to the Omaha thing this time, and Warren mentioned, I think thrice, that people that you will meet in life will change your direction.
Yes.
And you have to be very, very cautious about people that you surround yourself with.
Yeah.
When you meet someone, right, how do you decide, or it's a very slow and conscious decision over multiple interaction, to decide whether you want this person's affinity or, presence in your life? Or how do you decide that? How do you decide, what's the thinking behind whether you would like to surround yourself with this guy or not, or this woman or not? What do you think about that?
So everybody gets the benefit of doubt in the beginning. And if they mess up, they get a pass. The first time, it's okay. The second time, especially if it's the same thing, then it's my fault. I'm pretty clear with them. I tell them, like, listen, because of this reason, I can't spend that much time with you. I don't think you're horrible. I just don't want to spend that much time. And they're usually surprised, because I don't think most people my age or around the world are doing that. So that's how I decide to not. And then with the people in my life, you have to be observant, and you'll see the people who are making choices that you're astounded by, and you're hearing things that they're doing that are just brilliant. So you'll reach out to them more. I tell them, hey, let's get coffee. Let's go on a walk. Let's go hang out. Like, if I see them somewhere, I'll make sure to spend extra time with them, or take the time to learn more. And then what might happen is after like years, that person may not reciprocate, or they might make a couple of choices that you don't agree with. So then you again make an adjustment. So people change how they are. But I think finding people that are well principled is hard.
Because of your father had some great, has have some great relationship and friendship with the smartest people in the world of investing. What have you learned about relationship building from your father?
Yes, I think a lot of people think he learned how to invest because he was around them. It's not true. For the first 15, 20 years of the fund, of his professional career, he didn't have Munger and, Buffett and that were accessible to him. He would send them letters and hope that they would respond. He became friends with them later, right? So I think that's the first thing. But what I've learned from him about relationship building is you should never expect anything from anyone, but you should give something to everyone, right? And I think that's the best way to live your life, is to not expect anything and to just give. What I've noticed is some people appreciate that and will, return the favor. And some people just think, oh, like, yeah, I deserve this and not return the favor. But in relationship building, it's important not to expect anything.
And when you were attending a lot of these, meetings with your father, what were certain things you were trying to give to a person who is like 1,000 times or maybe 100 times wealthier than you in terms of money and knowledge?
If I'm tagging along with my father, I am quietly observing. I don't speak too much. They may ask me something and I answer, very politely, but I acknowledge why I'm in the room. I'm not in the room because of my own. I'm in the room because I'm his kid. So I don't really ask much. I'm just blessed to be able to learn. That's it. Yeah. I don't think I ask anything or try to learn anything that he isn't already asking himself. Sometimes though, when they ask him something and, he might be humble, I'll give more clarity. I'll explain things a little bit better, usually to compliment him. But yeah, like I think someone once asked my dad about, running a nonprofit. How do you hire the right people? Or how do you incentivize the right people? And he says, it's very easy, they know how to do it. And this guy responds, no, they don't. They don't know how to do it. And then I stepped in and I said, he doesn't realize it, but he says no to everything. And he's very dedicated to the one purpose Dakshina has, and anything extra that's off topic, he just says no to. So, I'll clarify if he doesn't know what he's doing in that exact scenario. But for the most part, I'll keep quiet and just take in as much as I can.
A lot of people and investors talk about circle of competence. And you take time to build that circle of competence. But as a young person, how have you built, first help us understand your circle of competence, and how have you built that over the years?
Yeah. The circle of competence is really important. When you're young, you want to learn as much as you can to build your circle of competence. But what happens is there's things you naturally understand better than others. So as a woman, I love to shop. So I know a lot about consumer brands. And I know a lot about retail. I know a lot about how women think, right? Most male investors don't know anything about this unless they observe their wives. And they've honestly mentioned this for the most part. So, for example, my father says he doesn't understand retail, okay? And I'll tell him, and he thinks all retail is bad. I'll tell him most retail is bad. But there's some retail that provides something for the consumer that you don't understand, that I understand, that's different. So, like, for example, like Sephora is owned by LVMH. And what happens is if I walk into Sephora, I will basically black out and spend $500. I can't help it, okay? Because each little thing is, $30, $40, okay? And it just adds up quickly. So someone had asked in a value investing group chat, how come at 11 a.m. Sephora is full, but Swatch is empty? And I said, it's obvious, right? To me, it's obvious. I said, Sephora offers skincare, makeup, hair care, perfume. You might, as a woman, you'll probably buy makeup. We have 7, 8 items, right? Mascara, eyeliner, foundation, concealer, lipstick, rouge, everything. It goes on, okay?
Oh my God.
You might be restocking one of those 7 once a year. Or you would, and so what happens is you end up going in pretty often. For hair, if you have long, thick hair, you probably go through a bottle of shampoo and conditioner in 6 weeks.
Okay.
So that sends you also into Sephora again frequently. Then for skincare and hair care run much faster down than makeup. Makeup is harder to use unless you're wearing every day. A woman between the age of 25 to 65 probably goes to Sephora 2 to 4 times a year.
Yeah.
Okay. And each time they might be picking up 2 to 4 items, right? Average price for item is $40, $50. They're going to spend $800 a year. A man who's buying a watch, unless he's a true watch enthusiast, when's the last time you bought a watch?
I bought this one, and after I think I've only bought a watch twice in my life.
See? Yeah.
Right.
And how much was each watch?
This was the costliest watch.
Yes.
The Apple Watch. The watch that I had before was gifted to me by my parents.
Yes.
Never bought. The first time I bought a watch was to gift someone, and that was like $200.
Yeah.
And I was way young, so I just wanted to gift someone something. So
the watch for a man is a much more infrequent purchase than a beauty for a woman.
True.
I know that because I'm a woman. I know how much I shop. When I see my friends shopping, we walk around Soho on a Saturday. We're just trying to stop each other from spending. It's the hardest thing, but we have so much fun. So I think your circle of competence comes from your natural interests, right? And the things you understand well. You have to develop that further. And as you study other companies and other managers and what they buy, your circle of competence grows. But there's going to be points you hit where you just don't understand it, okay? And you may try to understand it, and you may think you understand it, but then you get burned and something bad happens, right? So you don't know the limits till you try of where it reaches. And then when you mess up, you probably learn a lot, so your competence grows.
You mentioned a very interesting line that as women, you understand certain things that man does not.
Yes.
What do you think? What is something that a male investor does not understand, which you do? I had 2 parts to this question.
Yes.
Number 1, about the world, and number 2, about women.
Well, I think because men have ruled the world for so long, we've had many wars.
Okay.
And we have borders drawn, all kind of nonsense, okay? If women ruled the world, it would be no borders. It would be probably totally socialistic, and it would be an incredible booming economy. And it wouldn't even really be, I think, so much of an economy as much as just like a booming society. You know, like women do things for other people, for their families, for their friends. We provide, right? We're very nurturing and we provide these things. So I think if women rule the world, it would be a beautiful world, you know? And if the world is frankly just ruled by men right now, and it probably will be, unfortunately, for some time. I think that's what men probably don't understand about women, is that we would probably be better and more fair leaders than them if they just gave us the chance. So that's about the world, right? Kind of. And then I think it applies to what men don't understand about women. But I think women as investors are probably have a stronger survivability mentality. And this actually goes to, the microloans in India.
Yeah. The consumer durables one. Okay.
Yeah, like when they do, like lending is how you really build an economy, right? And how you enable people to build equity. So India has multiple companies that do this where, they go into the villages, they give a group of 10 women a $30, $40 loan each, and then they collect small portions of that every week, and they make that payment as a group together, right? They tried that with men, but men just went and, use it on booze or whatnot, okay? Women at the poorest levels of society have a very strong sense of, they have strong survival skills. Men don't have good survival skills, okay? Women know we live longer, we're more careful, we're more patient, we think with a longer mindset. Men think about tomorrow, women think about next year, okay? So I think that's one difference between the two genders that maybe men don't understand. And I think the male investors who have listened to their wives and bought the luxury brands and have done well are smart men. I've noticed there's a handful that have done this and have quoted it 'Cause I think they see their credit card statements going towards Louis Vuitton and Dior, and they realize, oh, LVMH is a good stock. So
And you still hold that.
I still hold that,
Yeah.
yes.
Tell me, you've spoken about a lot of great successes, right? Tell me, where did you lose the maximum money?
Oh, the most amount of money I've lost as a fund manager was buying Alibaba.
Okay.
And the couple of mistakes I made was the first, I saw that because Charlie Munger bought it, I bought it, which is wrong. You should always do your own homework. Okay. I also did do some homework. The second thing is I realized that, the Chinese regulator at that time was chasing Jack Ma around. Okay. It was a bit of a witch hunt. And I think I came at it too much of a Western lens, maybe even an Indian investing lens. I just did not think I didn't understand fully how the Chinese regulator worked and frankly, the pride that they have. Okay. So that was the second mistake. The third mistake is I've spent some time in China, but I haven't spent significant time in China. So what I really should have done is gone and spend a lot of time in China before I bought the company. So that was a mistake. I lost a lot of money on it. I sold the position at a loss. And the one good thing I did about it is I was honest with my investors about it. And most of my investors are also big Munger fans and also owned a lot of Alibaba. And what I told them was, if Alibaba was in my personal account, I would have kept it. But because Alibaba is in the fund and my job is to make you money, all of you already have Alibaba. We're not going to own Alibaba. That doesn't mean you should sell it, but I'm going to sell it. And I'm going to find something better to make your money back for you.
Did you also had this dilemma? Okay, the Alibaba is down right now, but it'll come back at some point. So I won't cut my losses.
I thought about that many times. I held Alibaba through losses for a long time. And it was, there were multiple quarters. I said, okay, it will come back. It's still undervalued. We'll keep going. I sold it maybe like a year or two ago. I don't even remember when, but I sold it at a loss. I also owned it in my personal account before I started the fund. Lost it there too. So I had lost some significant money on Alibaba. But the best thing is that when you lose a lot of money, you learn a lot of lessons. And I think it's, you learn so much about yourself and you learn so much better for next time.
What did you learn about yourself by that loss?
Oh, I learned that I am a long-term investor because I learned I have a really high pain tolerance. And I didn't sell because we had lost a lot of money. I sold because I realized how the regulator in China finally worked. I realized that this investment won't turn around for a long time. I actually didn't even know if it ever would. And I think what happened with DeepSeek and Alibaba coming back, we could have never predicted. So I think the reason Alibaba came back, nobody could have foreseen. But
what did you end up learning about the Chinese regulators? And how has that learning helped you?
So I knew this before I invested in China too, that the Chinese regulator has three parts to their framework. The first is it good for the people? Is it good for national interest?
And will it keep them in the...
Yeah, like it doesn't further China. And then is it good for China's GDP? These are three things they care about. I thought Alibaba passed those three metrics. I think because he was negatively speaking about the Chinese government, it violates the national interest because he was on a big tech stage, not being appreciative of his government, which is probably not the right thing to do in China.
Which is your favorite country to invest in, apart from India?
India. I love America. I love the United States. I grew up here. I know everything about I'm really more American than anything. It's the land of freedom. It's the free capital of the world.
Mm-hmm.
You have checks and balances in place. And I think it's a beautiful system. So I love it. I love it here and I love investing here. And this is where I learned to invest.
How many stocks are there in your portfolio?
Technically 14, but I view it as 10.
Why? Because of the financial
services. Yes.
Very interesting.
Yes.
How many of these 10, 14 stocks are there in India and are there outside India? I think.
Yeah. So we'll say 14 stocks. I think 7 in India. And 5 in the US.
Majority of your portfolio is in India.
No, majority is in the US.
Okay. And what's the percentage-wise
Yeah.
distribution?
So right now it's 50% US, 30% India, 10% China.
Okay.
I went back to China. Okay. And 5% Europe.
What did you buy in Europe?
It's LVMH.
Okay. And what did you buy in China?
I can't disclose that one yet.
Reason?
Um,
In the spirit of Ben Graham.
in the spirit of Ben Graham, the reason, what do you mean? Sorry.
So, Ben Graham used to share
Yes.
all his current
Yeah.
thing and used to discuss in the class.
Yes.
So,
Yeah. So the Chinese company I picked, I can talk about it vaguely. It's something that would do well in a high tariff environment.
okay.
And it's an incredible Chinese company that will do well for a long time, but it's something that does not export to the US at all.
Is it the alcohol company that you're talking about?
It's not the alcohol company.
Okay. Very interesting.
Yeah, that I own a little bit in my personal account. I don't own that in the fund, Mautai.
Okay.
Yeah.
What's your favorite cafe in New York?
My favorite cafe in New York is closed. It's called Cafe Lalo. And it was in the movie You've Got Mail. And when I was 12 and I came for the Buffett lunch, Guy took my sister and I and my father to this cafe. So every time I'd visit New York, I'd always come see this cafe. But when I moved here, they were closed through COVID and they never were able to reopen. But it's a very famous cafe. It's been in a couple movies. And it's great. But the cafe I like now that I get my coffee at there's two. It's a chain. It's called Ground Central. They have really good coffee. And the other it's called Ralph's, but it's actually Ralph Lauren, the designer company's coffee shop. So I would say those are the two tastiest coffees we have.
If a young investor is visiting New York for the first time, what would you recommend him to do in New York?
Well, he should send me a stock pitch.
Okay.
And if it's a good stock pitch, I'll take him for coffee and we can
Okay.
chat. But I think in New York, I love the museums. I love the Natural History Museum on the Upper West Side. I also love the Met on the Upper East Side. They have this beautiful exhibit on ancient Egypt that it's gorgeous at night. I think it's so beautiful. I would say the best thing to do in New York is to walk everywhere, take in the city. I think people would feel it feels like a Mumbai, you know? I would try the best pizza, which is Lucali's in Brooklyn.
Okay.
But it's a really long line.
Okay.
So you have to go at like 2 p.m. You stand in line for 3 hours.
Really?
5 p.m. they give you a time to come back to eat, which is usually at like 11 p.m.
This is a very inefficient thing.
Very efficient. But in those gaps of time, you can talk to a New Yorker in line, and then between 5 p.m. and 11 p.m., you can go explore that part of Brooklyn and take it in. So I think all the best things in New York have a really long line. And we have amazing food. So I would eat all the food.
Do you think there can be a business model around solving for these queues?
Yeah, there are. Yeah.
There are? Okay.
Yeah, people hire, it's called like a task rabbit to stand. They give them the spot.
Okay.
And they pay per hour. There's also, for the ladies who are investing, we have something in New York called sample sales. So the luxury brands will sell end of the season at 70% off, huge amounts. And the most popular brands have 2-3 hour lines. So, it's really fun. You see all the girls on their laptops working the whole time, but sometimes people will hire someone to go stand in line for them.
Very interesting. The second guest that I'm interviewing after going to India is one of your favorite real estate players.
Oberoi?
Yes.
You're going to meet
Vikas.
Yes.
If you were to interview him, what is something that you would definitely ask?
Okay, so the thing about Vikas that I love is when I invested in Oberoi Realty, they had an operating margin of 40%. No real estate developer has that profit margin, okay? I was talking to people in my network, including my father. They all said that is an unsustainable operating profit, okay? Operating margin. And I said, no, he's maintained this for years. It's increasing. I think now it's over 50%. And what he does is that he just doesn't lever up as much as all the other players. And he grows at a very nice, steady rate because his viewpoint is, I want to survive. I want Oberoi Realty to be a developer in India in 300 years. When I talk to every single one of his competitors, they laugh at him. Okay. They tell him, oh, like they think they're a luxury developer. They're not a luxury developer. You know, they're not growing at our scale. They're not like us, blah, blah, blah. Okay. But he's the best. It's the highest quality compounder. And that Gorgaon project in Mumbai, the amount they brought the property for is how much the mall makes per year for them. So it's an incredible yield. And all the developers are laughing at him. So the question I would ask is, how do you maintain your principle and continue like that so well when the entire market doesn't do it the same way? And honestly, I think they're stupid not to copy him. But I'm just wondering, how does he do that? How does he maintain that sound of mind and commitment to that principle?
Tell me, how did you first heard about NSE and how did you first heard about Vikas, the Oberoi Realty?
Oberoi Realty. Okay, so NSE I had heard about for years. So I was also an analyst working at a fund in India. So the fund was in the US, but I was going back and forth to Mumbai. And then I spent 6 months in BKC. So from the noise, I remember hearing people talking that NSE shares were trading on the secondary market. And I had kind of forgotten about it. And then, I don't know, January 2024, an Indian investor had told me that he owned a lot of NSE shares. And I said, how did you get it? Because you're not like a formal fund or anything. And he said, oh, you just get it through your broker. It's not hard at all. I was like, oh, okay. So I talked to my audit team, my legal team, and they took a couple months, but they came back and said, because it's pretty liquid in India and they have to IPO eventually, you can go ahead and buy it in the fund. And then I forgot about it again. And then the NSE team emailed me in the fall, a few months later, saying that they're coming to New York. Do you want to take a meeting? So I was like, oh, let me do work on it again. So then on NSE's website, they have all the financials available for anybody to look at.
Yeah.
You don't see that for any private company, right? So I had a lot of comfort knowing that these financials are online. Anyone can can look at them at any time and do work and post on the internet if it's real or not, right? They can figure it out. So I had a lot of comfort that it was a legitimate operation. I mean, it is, So that's the first thing. So I did my homework. I saw the radios compounding it. I was like, this is incredible.
Mm-hmm.
The valuation I got. So then I texted my broker. I said, I want NSE shares. They said, cool, we'll put you on a wait list. I was like, wait list? Like, I want to buy a lot. I said, yeah, wait list. I said, okay, you're not going to help me. So then I messaged my friend who had NSE shares and I said, connect me to some brokers. He connected me to 4.
Mm-hmm.
One of them was not charging fees and gave me the cheapest rate.
Who was this broker?
He's going to get a lot of business. He works at JM Financial.
I see.
His name is Rajat Agarwal.
I see.
And he wasn't charging fees at that time because they were doing a service for a big client of theirs. And he was the only one willing to do it for my foreign institution. The rest only wanted to do it for my personal account. So he was willing. And he gave me the price and I just saw, okay, this is like 30 times earnings. This is cheap for something that grows at this rate. So I just bought it. Then when I met with NSE, we were talking about it and I said, oh, by the way, I'm already a shareholder. It's 10% of my fund and I'm fully invested. And they were excited. So we just had a nice conversation and I met with them a couple more times after that. And I took some friends from the US with me to go visit them in India. And we met many companies in India, but they really
stood out.
They really stood out. They really liked, these are people who, all my friends are Warren Buffett fans. They know the toll bridge. They saw the NSE, they saw the returns, they saw the financials. They said, oh yeah, this is a...
What's the most awkward situation or most awkward question that an LP has asked you? You call them LP?
No, yeah, I call them LP.
Okay.
No, they ask all kinds of questions. I feel like an open book, so I feel comfortable at answering everything. I think the one thing I have to politely decline is when they ask me to talk to their 7, 8-year-old kids.
Okay.
Because they're too young to talk to. But they'll say, oh, you'll be so inspiring. And, can you talk to my 9-year-old? I'm like, listen, you can talk to your 9-year-old. You can show them my videos, but it's your job to teach your kids. So that's, I think, the only awkward thing that I have to politely decline. But I tell them, once your kid is a teenager, send them over. Then, then they have a basic math and basic reading standard. And then, we can get into the fun part of investing.
And I want to also understand when your father used to, try to put you in front of some great investors, what was his way of doing that?
Yeah. So I think he would always take permission first. So I think they had written to Buffett's office, can we bring our kids? And they said, okay, 10, 11, and 12, totally fine, no problem. And Buffett actually put us next to him, which was really nice. But I think that when he takes us around, he always asks first. And we were well-behaved kids, so we were quiet, and I don't think we'd speak much. And we just take in what we could. And if we got distracted, we got distracted. But he started bringing me properly around India at 14. And I think around 13, 14, 15 is when we would start meeting his friends who were investors and talking to them. And I met Guy when I was 12, but Guy's watched me kind of grow up.
He says you are his sibling. So
yeah, he's more like a fun uncle, but he does like to call me a sibling. And yeah, I think some of these guys have watched me grow up. They've become really valuable now to me as a resource, but I do my best not to overstep, and it's my dad's connection, not mine. But I know that if it's something that I think they can really answer and they're the only one, then I will ask, and I will always give more than I take. But I think even with my dad, when he brought my sister and I around, we were just, it's like silent little birds on the wall, just listening.
And how do you not overstep? So for example, the reason I ask, over the years, I've met some crazy good investors. These are the best investors.
Mm-hmm.
And you try to share whatever you learn with them. You try to ask, they always help you. But how do you decide this is not overstepping and misusing their time? And sometimes you have a dilemma, you have a question you want to ask. You ask, they reply. But how do you understand that, okay, this is not overstepping when they become a resource to you?
Oh, they have their own boundaries. They'll tell you, I can't answer that.
Mm-hmm.
And they give the time when they're in a good mood, So that's one thing. But I think that time question is answered better being like a young professional in an office. Your seniors, you don't take much of their time. When you ask them, you only ask something that they can only answer, that nobody else can answer. So the same way, I think when you ask the best investors, you ask them something that only they know, you don't, and you ask them something that, if you find on the internet, if it's already answered, then don't ask them, right? So I think you want to ask something that you want to ask one question, and you want to ask one really good question. And you want it to be, I think, different.
How do you invest in the times of uncertainty?
Oh yeah, how to invest in times of uncertainty. This is my favorite question. So what happened is, I think the Indian market at the start of this year was coming down, okay? And I was in India during this time. And I did a group session with the Millennium Mams, and they asked me, how do you figure out how to see north from south? Suddenly your whole portfolio is down in half, and you start doubting yourself. And, they're all women. So they're probably doubting themselves even more than men would in this situation. So I said, okay, the first thing that happens is let's say it's like a political issue, or it could be any issue. It could be COVID. It could be the great financial crisis. It could be any time of uncertainty. Whatever is happening politically or ethically that you have a problem with, you deal with your emotion outside of your portfolio. You go fight with your friends. You fight with your husband, whoever. You can go on the message boards and be like, oh, I disagree with this so much, and whatever. You go rant. Get all of it out, okay? Get it out of your system. So we do not have any emotion when we look at our portfolio. If it takes you an hour or a week or a month, you spend that month and you don't look at your portfolio. You go deal with your emotion. Once you have it out of your system, I would say the best investors have it out of their system faster, right? But it doesn't matter. Get it out of your system. Then you look at your portfolio. We can say it's the tariffs that happen. So then you go through each, you list your positions from largest to smallest. And, what happens is you might have your own account, your husband's account, your parents' account, your kids' account, your retirement account. So you list, okay, we have this much Costco, this much Oberoi Realty, this much, Edelweiss, HDFC, and you put it from largest to smallest. And then you spend a lot of time on the one that's the biggest. And you ask yourself, is this a good business? Does this have high margin, a good margin of safety? Does this have good alignment of interest? Does this have good capital allocation standards? Then you ask, how does this stock do in a high tariff environment? And if you don't know the answer, that's okay, because we have AI. And you can ask AI, how does Costco perform in a high tariff environment? And it'll tell you, okay? For the most part, for the big companies, it's correct. It's pretty close to correct because a lot of people are prompting. And it's a smart AI. You go each one and then you decide, is this a hold? Is this a sell? Or is this something we could probably add more to because it'll do really well? Okay? And you do that for each position.
Mm-hmm.
This exercise, if you have 15 stocks, should take you a long time. It should probably take you a week or so, maybe 2 weeks. But you want to dedicate good time to it. Now, the couple of things you've bookmarked for sale, that doesn't mean you sell today, okay? That means you say, okay, this is something that probably won't do that well. And now that I've looked at it, is actually a bad investment, okay? And you've probably already lost a lot of money on this already. So you just say, okay, once it comes to like this price or comes up a little bit or something, I'm going to sell it. Don't panic sell right away. That's the worst thing you can do. Then you do my favorite thing. And then you get to look at all the companies you haven't bought, but you love.
Okay.
Because they were too expensive. And you check, how does this do in a high tariff environment? Is it a good business? You ask all the questions. And if it passes every question, then you say, okay, I'll buy more when it's at a good price. That's my favorite way to handle uncertainty. There's no other things you need to do.
A couple of things here.
Yeah.
Number one, you mentioned emotion plays with you a lot.
Yes.
What's the most high intensity emotion that plays with the mind of an investor?
Fear.
Fear.
Fear and anger. I think if you like politically disagree with someone,
Mm-hmm.
you might bring that into your portfolio, which is a problem. I think fear and greed play the biggest role. Sorry, that's the obvious answer. So I think sometimes you have like a 600% return on your investment, and now it's more than half of your portfolio. Probably not a good idea to keep that position. If you're a retail investor, where you should probably sell a little bit and find some other things that are like that. And I think there's also fear where, people lose a little bit and then just sell. They'll do stop loss in India and miss out on a huge gain. So, and the same happens where someone has a double and they have a fear that it won't go any higher, so they also sell. So, and there's no correct or wrong way. I think you just have to reevaluate as if you were buying at that price again and decide, is the upside still there? Is the downside protected? And do the analysis.
What is something that you really love, but you can't buy because it's too costly?
The one that goes in and out the most is HDFC Bank.
Okay.
So sometimes I buy it and it's expensive. And then I'll pay for it and then it'll perform badly because I bought in the US and it's an ADR to India. Okay, then I'll say that's a mistake because the US banks trade at a cheaper valuation than HDFC. Okay. And then I'll realize a year later, okay, wait, but it should trade at a price rate because there is more growth. So then I'll buy HDFC again. And then I'll get hammered again. And then maybe sell a little bit or I'll add more. So I always have that dance, I think, with HDFC of what is the right price to pay? Should I own it? Should I not own it? So right now I do own a little bit and I hope I just let it stay and I stop making decisions back and forth on it because that's the one I'm always like uncertain of and I keep changing my mind on. But I think if you own HDFC in India and not HDFC in the US on the ADR, it's probably a good investment. Something that's really expensive that I have. I mean, like, for example, I would love to buy Mautai, but it's always been at 25 times earnings and it's been flat for years. And it is core to the Chinese culture, but it just hasn't done well in the last couple of years.
Why do you think it hasn't performed well?
I don't know. I'm confused why it hasn't.
It's a state-owned company, right?
State-owned enterprise, yeah.
But
I don't know.
are people not drinking that much more?
I don't know. I think people are drinking, and I think it gets a little bit cheaper every year on valuation, but the price stays the same.
Are the profit margin increasing? Is the sales volume growth happening?
It's all just staying the same. So I just won't buy it because I'm not seeing the growth that I think used to be there for Moutai. But it is a great company. And I think it is something that if you have a personal account, you should own a Moutai for a long time. But I can't bring myself to buy it in the fund because it just hasn't performed well in the last couple of years.
You went against Lilu to buy and not to sold this script of yours, right? I remember one story where Lilu called your father.
Yeah, Lilu called my father and said it's time to sell Moutai. So they sold Moutai. And he said, Lilu is if Lilu tells you to sell Moutai, you sell Moutai. And I think my dad had mentioned to me, we sold Moutai. Lilu told us to sell Moutai. And I just said, but it's the world's greatest compounder. Like we've talked about that for years. It's the best compounder. I remember Charlie Munger talking about it, like, I can't sell this. And at that time, I was still like a teenager. Or maybe like early, maybe just out of college. Part of it was because at my fund, I couldn't really buy or sell stock. So I would have had to take extra permissions to go get to sell it. So I just didn't bother. It ended up being the right choice. So inaction is good. So I still own it in my personal account, and I've had a good return from where I bought it. But in the last couple of years, I haven't seen the return in my portfolio. But I know Moutai is a long-term, a good investment. I think if it really comes down in price 10, 12 times, then I would buy it.
You speak a lot about your personal portfolio and the fund portfolio. What are some dilemmas that you have in your personal portfolio and which you don't try to replicate in the private portfolio and then, the vice versa?
So I would say the 10 largest positions in my personal account are the same 10 largest positions in the fund. So the only things I do in my personal account that I don't do in the fund is if I owned it before the fund started, I just didn't sell. It just happens to be there and I didn't feel like I should buy it for the fund. And the second is there was a company in China that was direct listing a holding into the US. And I forgot the name of the original company, but they were listing Shark Ninja. And Shark Ninja makes household goods like vacuums and like blenders and air fryers, like these sorts of things. And it was a special situation where the value of Shark Ninja was much cheaper than the IPO value that was going to come. It wasn't actually an IPO, it was a direct listing. And I had never done a deal or investment where something was listed in one country and then listing a subsidiary in another country. And I just didn't have comfort putting my clients' money into that. So I said, let me first try it myself and see if it goes well. And then maybe the next time something like this happens, I'll have more comfort because I'd never done it before. So I maybe $5,000, $10,000 I put into this deal. And it direct listed in the US. And for 3 weeks, the shares did not show up. Okay. And in that 3 weeks is when we saw the biggest boom. And so what I think a lot of people were doing is when it listed, they were selling it. And I like Shark Ninja. I think, household appliances is a moat. You build, people have like vacuums and blenders they trust. And so it's like, builds goodwill with people. Like the brand was a good brand. It's a well-known brand in the US. So I just said, okay, like this is something that can compound for a while. And I just let it sit and do its thing. So now I know in the future, if I want to do a listing from another country into the US or US into another country, it would probably take a couple weeks for the shares to show up. That's not the case for most IPOs and listings. They usually come right away. But this was very awkwardly held up and a lot of people weren't. It was messy. It was very messy. And so I'm glad that I did it in my personal account and not in the fund. That's the only trade I've done that's in my PA that's on the fund. Yeah, well, the fund was alive.
So 2 questions. Tell us about some greatest of the greatest investors that are unknown to the world.
Oh, it would be Pulak is my number one.
Of course.
Well, I think Indians don't know about Lilu, so that's another one. I think some of the guys who have passed away maybe are less relevant because we don't hear about them anymore, but Peter Lynch and Sir John Templeton are worth, I think, going back and looking at what they say. I think in India, it would be a good Fin influencer. So I love that term because there's so many that have put so much into the public domain who are no longer alive, but their whole legacy is available. And then I think on the VC side, my favorite is Bill Gurley.
He's a very interesting.
He's
in New York also, right?
I thought it was an SF.
SF. Okay.
I actually don't know. I just think he's cool.
Tell me about a couple of very interesting young investors that you believe, apart from you,
Yes,
will be
that would be good.
future billionaires or, future Warren Buffetts of the world.
Let me think. There's so many that are starting now. And they're good investors. They just can't get the capital. So I don't know which ones will do well and which ones won't, because your ideas can be as good as they are. But I think you have to be able to raise. So being a good investor is also being a good marketer, right? And being able to get capital and being able to convince people to take a leap of faith and invest with you. So I don't want to say any names just because I don't know how many of them will even be able to start that I think are really good. So we'll see. But I think the next Warren Buffett or Charlie Munger hasn't even started yet. I think he or she is probably maybe still in high school or college and will probably really use AI to make them an incredible investor. I think the future one isn't born yet. Or not, is born, but isn't on the scene yet.
Very interesting.
Yeah.
What would you advise to this guy or a girl who's a great investor but is not able to raise?
I think a lot of them spend time pursuing the endowments. So they'll go tell the big endowments and the big foundations, I have this style of investing and you should put money in, okay? And all the endowments and foundations, they'll take the meetings, okay? Because there's people that work there whose job is to make sure they know every fund, okay? But they don't want to be more than 10% of your fund. And they don't want to write a check less than 50 million, which means you have to be 500 million, okay? So it's a chicken and egg problem. So I think what happens is a lot of young people, they're really smart. They have great educations. They're really bright. Spend a lot of time pursuing endowments and big checks. I'm like, no, you can take small checks from the people around you, do a good job, be responsible, don't use leverage on friends and family money. Start with the friends and family, and you can start small and scaling. That's how I started. And I got lucky because I'm, my dad's kid, that people are interested in me because they recognize the last name and they send an inquiry. But I think even now, I don't have institutional capital. Even my father does not have institutional capital. He manages $1 billion. I don't think you need big checks to make big amounts of money. I think you need small checks. You need to build trust. And as you do well, the saying is, people will swim through shark-infested waters to come to you if the returns are good. So do a good job. It's okay if it's small amount of money, but do a good job. It'll come.
Very interesting.
Yeah.
Because you mentioned Prem Vatsasa, and the reason I was telling the story is that there are a lot of people in India that don't know about at least the Indians who are doing well.
Yes.
So I'm here hosting Ram Shri Ram sir, the first founding board member, people like Vinod Khosla sir, people like Naveen Chadda sir. He's a very interesting name in the field of venture investing. Prem Vatsasa has created this crazy big company, Fairfax.
Yes.
But a lot of people in India don't know about him.
Yes.
Tell me your interaction and your learning with him.
I would say Fairfax is probably one of the closest clones of Berkshire Hathaway because Fairfax owns the insurance company arm. From the premiums they collect on insurance, they create the float. Well, and then the float is the difference between the premiums and what they pay out. So that's the float. And he takes the float and he invests in companies. And he's done a great job. His track record is not as good as Buffett's, but it's not bad.
Mm-hmm.
And he's been in the business for, I think, 30 years, maybe more. I go to Toronto every year. I don't know the exact year. And Prem grew up in India. I think it was Hyderabad. His father was a school teacher, principal. And he came to Canada. And I think he had started Fairfax. And a guy named Francis Cho explained to him the reason Berkshire does well is because of the float. And he didn't understand float. And Francis explained what the float was. And Prem said, okay, I get it. We'll keep going. He built it. And what I love about Prem is he did what Buffett did. He committed himself to a principle and he scaled it. And he has he has an incredible team that works with him. Some of the people that I used to work for also used to work at Fairfax. And Fairfax has an Indian subsidiary that's publicly traded, and he invests in multiple companies in India. He also they own Terminal 2 at Bangalore. And so it's a shame people in India probably don't know as much about him because he has an incredible track record. He's also an incredible person. He's a large donor to the Dakshina Foundation. So we have a nice family friendship with him and his kids and now his grandkids. And yeah, I think people should look him up and learn what he did and follow his track record and follow what he invested in.
2 questions.
Yes.
On the verge of not disappointing Prem, why would you not invest in Fairfax?
So I can't invest in Fairfax because he's a big donor to Dakshina. And I'm on the board of Dakshina Canada.
Okay.
So it would be
A conflict of
it would
interest.
be not kosher. Yeah, it'd be a conflict of interest if I invest. So I can't invest for that reason. I don't think I can promote it either.
Okay.
But I think if you're in India and you're looking for people who you haven't heard about, he's an incredible person.
Tell me most interesting story that you have with him and most interesting learning from an incident that you had with.
Oh, with Prem. I haven't had many interactions with Prem. But his only son, Ben, was named after, I think, Ben Graham. He came to India in 2018 when I was living in Mumbai. And we spent a couple days with him, taking him around to meet Indian companies. And I was showing him, Palace Royale in Mumbai.
Yeah.
So I was pointing out at Palace Royale and showing him all the fun facts about Mumbai and the city. And he's a little bit like me where I think he was born and raised in Canada. So he didn't have a great understanding of India. If you talk to him today, he knows India better than me.
Really?
He leads the Fairfax India meeting. He's a seasoned investor. So even Ben Watsa, I would say, is not so well known, and an Indian value investor.
Who are the other value investors who are not known to the world, whether Indian or global? You mentioned Lee Lu.
Yeah, Lee Lu is one.
Amazing story.
Yes.
Francis Chow, you mentioned.
Francis Cho. Okay, so Francis Cho is in Canada.
Yeah.
And Francis Cho, he gave me a really nice insight. He just pulled me aside the first day I started the fund, and he said, you're either going to be an investor who I think is a rifle shooter or a shotgun. And I was like, what do you mean? He's like, you'll either have a basket of stocks or you'll have a couple of big bets. And he said every investor, they promote one or the other, but it's whatever you're comfortable with. And I think what he was trying to tell me is, yeah, your father does it this way, but find your way. So I really appreciate that from Francis. And he's a really humble guy, and he's a really nice guy. He's also pretty funny. I would say he's a not so well-known investor, but his holdings are publicly available.
No, underknown value investors.
Yeah, so maybe David Abrams. Yeah, Abrams Capital. He came out of Seth Klarman's fund, so he has an incredible track record. I also really like Terry Smith. He runs a fund called Fundsmith. I'm probably closest to his style. And he says, I've never met him. He says winners keep winning. So
That's
he likes the big companies that no one can disrupt.
Very interesting. Any Indian investors, value investors, unknown?
I like Ramdev Agarwal. I like Ramesh Damani.
Unknown. These are
I don't know.
that we have learned from.
I don't know unknowns. I like the guys at NM. I think they're really smart.
In MA, we hosted Vallabhbhai Bansali. I've not put the podcast up.
Oh, cool. I'm excited to watch that.
Do you know Vallabhbhai?
I've met him. Yeah, I met him in LA at the Munger meeting.
Oh, really?
Yeah.
Very interesting. What's this LA Munger meeting?
Okay, so it stopped happening.
Okay.
But Munger he used to own Daily Journal.
Okay, yeah.
And the Daily Journal has an annual meeting. And at Berkshire, 45,000 people come. But Daily Journal, 200, 300 people come.
Oh my God.
And it's a better way to ask Munger questions. So they were at that meeting. I met them there. And then Vallabhbhai's nephew.
Yeah.
I've met him in Mumbai, and he's really
Aryaman?
No, I think Akash.
Akash.
Yeah.
Akash. Okay. I'm talking. Aryaman is more close to me, so he's son of Akash.
Yes,
Sir. Very interesting.
Yes.
One problem that I have. One thing. This was one thinking which was disturbing me. This was my first foreign Buffett's meeting. Okay. The Berkshire Hathaway meeting, and I'm just worried that this would be his last meeting. Okay.
It is.
It is right.
He came out and said he's not going to speak at the next one.
Now I wonder this is the time where I've started learning about the world and the world of investing. What would be an other mecca of investing world which will bring so many investors together? And there was a point in time, it was very inspirational for me. You know, the time when everybody stood up and clapped for him?
Yes.
There was so much energy in that moment. And it makes you wonder. It's just like an other human being, right?
Yeah.
But he's done so much.
Yeah.
He's taken so many decisions.
Yeah.
And that's really inspirational, right? It's excellence in flesh and blood, right?
Yeah.
What are other events, underknown events like Berkshire Hathaway?
I don't know. It's the old, I mean, I go to Berkshire. That's the biggest one. I do go to the Fairfax annual meeting in Toronto. That's about 4,000 or 5,000, maybe 2,000 to 4,000. This last year was pretty full. So that's another one. I don't know if we'll have one again. Like Buffett, I think what they did at Berkshire, the way they built it, true to the Midwest principles, he put the shareholders first. We will never, I don't think we'll ever have that again.
Yes. I wanted to ask you, while growing up, because your father is an investor, you becoming an investor was really your independent thought, or was it a mimetic desire? I'm very curious to know about this.
It's a good question. So I mean, I grew up learning about business models. There was no pressure in the home to become an investor. I would say there was pressure to do well in school and to find what I was good at. But what both my parents inspired me to do was to become an entrepreneur. So my mom also ran her own businesses. So I really saw them both as business people. And I wanted to be an attorney. I wanted to be a lawyer. And I wanted to fight people. That's way more fun to me. And I think I realized that investing is cool because you get paid if you're right? And if you're an attorney, you're also paid if you're right. You feel good winning a case or whatnot. So I always had that natural tendency. They were great. They're excellent entrepreneurs. So that was always emphasized in the home. I think, I'd say teenager I fell in love in investing when I was 19. So teenager, 13, 14 to 19, I just thought my dad was a guy who made wealthy people wealthier. That's all I saw, right? And I went to Berkeley, which is very left, very liberal. And I just thought this is not a noble cause, okay? And I had met the CIO of the UCLA endowment. So this is where privilege is. I'm really grateful because of my, I get to be in a room with people that have a lot of say. So the CIO of the UCLA endowment and I talked about, I had an investment in MasterCard. And I think we talked about making rich people richer, and I didn't like it. So he said, come work at the endowment, because the client is not a wealthy person. The client is the school. And so it goes to financial aid, grants, research, teachers' pay, whatever. So it was a worthy cause to invest for and to make money for. So I really liked, and I also always loved Dakshinal growing up. So I always thought that my parents did was always awesome. At the endowment, I really fell in love with investing because I would read the last 20, 30 years of letters from every major investor who managed billions of dollars.
Warren Buffett.
Even like Greenlight Capital, Cedar Rock, which is now closed in London, Hill House in China, which they had made a big investment in JD.com. So I read all those letters going back, and I fell in love with investing. It was the coolest thing. And I just was like, oh, this is so cool. And they had sent me to India for 1 month. So I worked at New Horizon Investment Fund in Nariman Point when I was 20 years old for 1 month. And I learned a little bit about the Indian market. And after college, I asked the UCLA endowment, or when college was ending, can I work for them? And they said no. They said, go do equity research, go work at a fund. So then I went to my dad and I said, okay, I'm ready. I want to work at a fund. He was shocked, okay? He was just totally shocked that I was this Berkeley left liberal girl who thought making rich people rich was the worst cause ever. And I was like, no, I actually really like investing, and I've totally fallen in love with the game and all of it. And I had this incredible resource at home at that time we were talking about investments a lot. We had started. So he said, okay, I can email some friends and see if we can get you a job. I said, no, I don't want that. And we already have the last name, like it's enough. I want to try myself. So he said, can I get involved in the process? And I said, sure. So I wrote a stock pitch on Dillard's, which Greenlight Capital, David Einhorn had bought. And it was a women's retail company. So I knew a lot about it. And it ended up being like an interesting REIT of an investment. So my dad helped me edit that. And we mailed it to 750 funds. And we've come full circle. So I really fell in love with it then. And what I love about my dad is he didn't really get involved with investing till I came to him and said, this is interesting to me, and like coach me. And that's when all we do is we share fun stories and fun pitches and how businesses work. And he's a great guru in that way, but there was no pushing from a young age that pushed me into it. But there's probably things I learned as a kid, being his kid, that I don't even realize that I've internalized in my investments, but I couldn't put it into words for you.
And what is one thing that you believe, if you were not born in this lineage, you wouldn't have figured it out, or you would have figured out on your own? A two-part question.
Yeah, the no self-pity, no envy.
Mm-hmm.
That was basically hammered into my upbringing, where, if kids are doing better than me in school or someone is more successful, I think it's very easy to say, oh, poor me, or because of my situation, I can't do well, or they're just smarter or whatever, or like become jealous. And what I was raised with was no self-pity, no envy. It's you versus you. So I'm very lucky that I got to learn that at a young age. I think people learn that later in life. And then I would take it a step further, which is probably comes more from my mom, which is if someone is doing better than you or performing at a higher level or getting better grades, what can you do? What are they doing that you're not doing that it's easy to copy? And that helped me a lot with school, because in middle school I had C's and B's. And in high school, I knew the kids that were getting straight A's, and I looked at how they behaved in class, and I looked at how they approached homework and assignments and clubs, and I copied all of it. It was the most powerful tool.
Tell me about a couple of trends that you have recently figured out that you're most excited about.
Oh, I think I'm really excited about, I think the world outside the US is going to grow at an incredible rate. And I think different countries will grow at different rates. So I'm forcing myself to spend more time in these countries, which is great because travel is fun. So I'm going to go to Turkey and look at some companies there. I went a few years ago, but I just got my license to trade, so that'll be fun. I'm also going to spend some time in Hong Kong and China, so I get a better feeling of the Chinese culture. It's been a few years since I've been. Same, I think I need to go to Taiwan. And I love going to India. I think I used to just, I used to spend a lot of time in India. Now I've reduced it. But I'm forcing myself to increase my time in the countries I spend my time so I get a good understanding. And I'm really excited about that. I mean, India, I'm the most bullish on. And what's really funny is everyone outside of India, I think India is their number one too. Even the Brazilians are coming to me to talk about India. The Argentinians are coming to me to talk about India. So people from Mexico, people from the US, people in Europe and Australia are coming to me to talk about India. So I think the whole world is very bullish on India. But I know the show is very bullish too.
Let me ask you the same question.
Yes.
Your father asked when you were 8.
Yeah.
He asked you and your sister.
Yes.
Sister chose Disney. I'm just forgetting what...
I chose Target.
You chose Target.
She did better.
Okay,
yeah.
She did better.
She did better.
If somebody asked you the same question, and I want you to really think on this, what would your answer be?
Costco.
Costco,
because even in the luxury shopping I do, my very favorite perfume sells at $350 a bottle.
Which is your favorite perfume?
Called Byredo.
Okay.
And it's actually at the Geo Mall in Mumbai, which I was really excited about. It was there. And if I'm a consumer, I normally will buy it at 20% off when it's on sale at Nordstrom or some retailer. Costco has it at 40% off once a year, and it sells out in 2 weeks.
Really?
So I always wait to buy it from Costco.
When is this time?
It's right now.
It's right now?
I think it's almost over. So I just bought it, yeah. But yeah. So I think that's crazy because Costco people associate with toilet paper and paper towels and water and eggs, but they also have perfume and beauty and clothing, and they provide incredible value for Americans that build such goodwill with people. They have the lowest price if they have something always.
What's the best book that you have read this year?
I read Same as Ever by Morgan Housel. I thought that was a nice book.
Okay. What's the best documentary that you have watched? this year or lately?
Oh, there was one on Osama bin Laden.
Okay. The Netflix one?
Yeah.
Okay. Very
It's kind
interesting.
of nice.
Yeah.
I enjoyed it.
Who's your favorite investor in New York?
Oh, my favorite investor in New York is probably Girish Baku.
He was there at the meeting.
He was there and
Yeah.
he asked me about futures and options too. Yes. He's probably not a well-known value investor, so that's a great one.
No, but he's a tech investor, right?
It's more value cycles.
Mhm.
10 years ago, he loved women luxury.
I think his son is also in U Chicago. What is something that a lot of people don't understand about Charlie Munger while reading his book?
Charlie Munger behind closed doors is a really funny person.
Mhm.
He's a total comedian. I think that people don't know. And I think the other thing that people don't, so we asked, Munger told us that before he passed away that he was having trouble sleeping at night. Half the population has trouble sleeping at night, because they're thinking too much, they can't sleep. So at 98 years old, Munger was thinking too much, he couldn't sleep. It was the most common problem. And we asked him, what do you do? He said, I watched 2 episodes of Seinfeld. That's it. And then he passes out. And I think what's so cool about Munger is how I think people think that, oh, Munger is special and Buffett is special. And then they are smart guys and they're intelligent. Okay, that's true. But there's a lot of smart people in the world. And hard work is also something that's easy to learn, right? It's hard to maintain. I think anybody could have been Munger or Buffett. And I think anyone in the future, I don't know if they'll be as good. I think the times are different and things are different. But I think if you are intelligent, if you have high integrity, if you have high energy, you can achieve incredible things. I think the hard part is being consistent. And I think discipline is really hard to master. And I think, part of it comes from being crazy about it and being in love with it. But I think there's something about being devoted and dedicated to something that's very hard to clone.
If you were to bet on any one young guy who you believe will be either Charlie Munger or Warren Buffett of tomorrow, what
Yes.
do you think? Who will it be?
Well, I hope it's me.
I'm sure.
I hope it's me. I think, I've structured my funds to be exactly like Buffett. I study him. I study Munger. I've made it my mission to try and be as good as them. And, Munger says go fishing where nobody else is fishing. So I do India. I do a little bit of China. You also have to work in your circle of competence. So I look at the United States. I don't know if we'll have anybody as good as them. And I think the guys who are at Berkshire Hathaway now, Greg, Ajit, Ted, and Todd, really smart guys. They're smart guys, and they've also devoted themselves to these principles and this style of thinking.
Mhm.
And there's so much in the public domain. I think anybody could be the next one, but I hope it's me. Yeah.
What's the most ingrained memory that you had when you visited Charlie's house?
His house is like a movie, because there's his pile of reading is so high. It's just the books everywhere. It's crazy. And I think, I don't know. I know what the inside looks like. It's awesome. And he has this gorgeous leather reclining chair. Most standout memories, I don't know. I think he just, in a 3-hour dinner, will go through 40 topics. And he'll change the topics to whatever he wants. His family is there. They'll ask questions. We'll ask them questions. And I think what I love about those dinners with Munger is just the variety of topics we talk about. So we'll talk about Costco. We'll talk about education and the best way to learn. And one time he asked us, do as students learn better with a white background or a black background? Like the Khan Academy black background? Or in the US, we have a white board, right, that you write on. Like, which background do you learn better on? And that was like a 20-minute debate. So it's just the most fun topics and I think he really wants to hear what everybody in the room thinks about it from different generations, different countries they've gone to school in. So like, my parents grew up in India, so they had an Indian education. My sister and I, we grew up in the US. We had an American California education. And then, Khan Academy is very popular for supplementing school. So did we learn math better with our whiteboard teacher or our Khan Academy blackboard teacher? I don't know.
Very interesting. Because you grew up, with all these people. Who are some other folks in the Munger's clan that nobody talks about?
I think the one thing that the investing community does really nicely is that they're very public and they give their information out.
Why do you think there are very less women investors?
There's few women investors because we have few role models. So there's no female Warren Buffett. There's no female Ramdev Agarwal in India. We don't have female presidents in the United States. We have very few female leaders around the world. And it's sad. And I think I used to not know why. So a few years ago, a fund manager who's a man asked me why, when he went to his daughter's school, he had twin daughters. He gave a presentation about investing. And he said only the boys were participating at 12 years old. He said, what happens where at age 12, girls don't participate in the classroom? I said, I don't know. They normally participate in the classroom. This is strange. And I was talking to another female investor who is a lovely woman, Lauren Templeton. And I asked her, innocently, why? And she said, I had the exact opposite experience. When I went to my 12-year-old's classroom, my daughter's classroom, the girls and the boys were both participating, but the girls asked lovely questions. And I said, oh, then it clicked. Because the girls saw someone who looked like their mom, who looked like what they would grow up to look like one day, who they felt comfortable asking that question to. And it's not to say that men make it uncomfortable for women all the time, but representation is very important. If you're a minority, if you're a woman, it's important to get out there and speak to young people because, one, young people have a lot to learn and their minds are like sponges. They could take it all in, but you're going to inspire someone who has not been inspired before.
I truly appreciate you doing this.
Yes.
And the reason is, I'll tell you a backstory for this. And this is something that I'm not very proud of. I've done so many interviews and unfortunately, so in my life, I was sent to an all-boys school, okay? So till 12th, no women interaction, only with, the cousins that I had. And then when I went to IIIT Surat, in my computer science batch, there were only 2 women, okay? Yes. Never interacted. Then I went to some other place where, we got some grants from the government. So all my time used to go in lab, right? No interaction. And that, how I grew up, that suddenly translated into my work.
Yeah.
This is a weekend hobby which I do to learn from the best of the best people. And when I saw, okay, I have interviewed 100 people and there is no single woman. And I felt very sad about this. And one of my mentors, mentioned, and you are my first women guest on the show.
It's such an honor.
After doing 100 episodes, and I'm very happy to have you.
Thank you.
And I'm genuinely glad that, this will change the representation that I have.
Yes.
I want to know, who are some of the greatest female investors that had huge influence on you?
Okay, yeah. So there's 2 that I talk to maybe once or twice a year when I see them. So one is Lauren Templeton. She's the grand niece of Sir John Templeton, who was a very famous investor. She's so kind to me. Every time I see her, she makes it a point to introduce me to people around her, and she's quite encouraging. And she's a great investor herself. And the second is a woman I was connected to rather recently. She lives in New York. Her name is Fatima Diggy. She runs a fund and she works in kind of near the Upper West Side in New York. We've met 2 or 3 times for lunch over the past few years, and the majority of the conversation is a little bit about investing, but a lot about how to make sure I'm visible, how to make sure I feel confident and comfortable as a female investor. And I think even for her and Lauren, I'd say both of them are surrounded by 99% men. So I don't feel bad that all your guests have been men on the show. It's not because you weren't seeking women out. It's because there aren't women in this field. And outside of these 2 ladies, I have heard of a couple of other women and haven't had the opportunity to meet them yet. I really hope it changes. I hope every year my career progresses, I meet more and more women in the field. But the real problem is that we just don't have good role models.
How will you break this catch-22? It's like you won't start a business if you don't have money, and you won't have money if you don't start a business.
Yes.
So how will you break this catch-22?
I do what I can in India. There's a nonprofit called Millennium Mams. So every time I'm in Mumbai, I go meet with the group. I'll do video calls with them, and on some of the video calls, there are 400 housewives who are on this call who all maintain personal portfolios. It's the most inspiring thing. And I think it starts in the home. It starts with having an encouraging father and a mother who believe that their daughters and sons are equal. Their daughter and sons can both do incredibly if they want to in their career. It starts in the home. And I see India shifting in this way, but it's going to take time. It just starts with, we have this concept in the US of a girl dad, and it's a father of a young girl who is a pioneer and a champion and a cheerleader and a coach for their daughter's career and professionalism. So I think maybe we need a girl dad movement in India too.
Do you think your Munish is a girl dad?
Monish is a girl dad. Yeah, my father he is such a girl dad. He only has 2 daughters, and I mean, our whole life, he always told us it doesn't matter what you do, as long as you're the best and you put your best foot forward. And I think even if he had had a son, he would have said the exact same thing. But I felt we were raised not like daughters, but like children, like sons. You're raised in a way where your career is totally important. Yeah.
And when you mentioned that you were raised like children and not, female, what do you mean by that?
Yeah, so I think something that happens in Desi homes is boys and girls are treated differently. And it's because of the way society is. And, parents have a right to be fearful that, the girls take the short end of the stick if anything bad happens. So I understand why it happens that way. But, it's like in corporate America, what I've noticed is if you're a male or a female not doing well in your job, you'll get a performance review. They'll put you on a 3-month plan to improve your performance, right? In India, what I think sometimes happens is, if you're a boy or a girl, if you're a boy, you might be put on that performance expectation and how to improve. But I think for a lot of girls, the alternative is not to perform better in work, but to, maybe consider becoming a mother and retiring from work. So you see a lot of very intelligent women in India step away from their careers to have children. And in the US, the same thing happens, but more and more women are pushing the career and the biological clock together, to do both at the same time. And it becomes very difficult at home. And you basically have to earn enough income to have help at home to help you in the US. But I think in India, the encouragement isn't there the same way. I think that's a problem.
And the solution is?
Mindset shift. I think managers and CEOs need to create policies in their workplaces to encourage women to stay in the workforce. So Apple and I think Google and I think they do this in India too, but in the US, you can freeze your eggs for free.
Really?
For free. Because they want to maintain that talent. And, and Indra Nooyi says this. She says for women, the career clock and the biological clock are in direct conflict with each other. So they've figured out this egg freezing thing, but it still is hard to carry the baby to term if you're in your 40s and you have more risks and complications. So it's still a problem that nobody's figured out. But there are policies that I think India can put into place in the private sector to encourage women to stay in the workforce. And we have this problem in the US too. We have 3 months of maternity leave. It's not enough. I think Western Europe and the Nordic region of Europe, they do it well. I mean, it's kind of crazy. They give like almost a year of paid leave. It might be too long. And that's also part of the reason why I started my fund when I was 25, because I did not want to have a 2-year-old at home when I was starting a fund. I wanted the fund to have a life of 10 years before I have a child, right? So I made that choice and I took that gamble much earlier on. And I was lucky because I had my father and I had his blessing, and I had this incredible network that was able to help me. So I'm lucky that way. But I think most women, I know that they don't have that. There's a benefit. So the one thing I've learned from my clients is they like that I'm young. So the ones who have invested with me, what they said is, you have 30 years of your prime. So I get to invest with you for 30 years. And people who put money in my fund, they don't plan to take it out in 5 or 10 years. They literally tell me 20 plus. And I tell them the same thing. I said, don't put money you need to take out quickly because I need that long to really make good money for you. But then I do meet people who say, oh, you're so young. How can we trust you? You don't have much of a track record. And I tell them that's no problem. You do your homework on me. So the first 3 to 9 months, convincing people was very hard because I had good returns in my personal accounts. I had made more money investing than on my salary, which is why I started. And my father basically came to me when I was 25 and he said, the job you have is useless. And I had started the management company when I was 23 just to invest some money to build some kind of track record, more for myself, not for other people, to convince myself I could do it. At the same time, my best friends and I had created a hair care company. So we had made a product that, in India, when you put the oil in your hair and when you wash it out, it doesn't take it all out.
Yeah.
So we created something that was like a hair oil, but it had a little bit of soap in it, like shampoo, because that's
Philic and hydrophobic.
hydrophobic, which means it attaches to water and attaches to shampoo and it washes out in one go. And it's also like a hair treatment you could put in your hair without it being too messy.
Mm-hmm.
So we had made this product, we were selling it. So we had that company. And then on the side, I was also working on the management company for the hedge fund while working at it was a Y Combinator funded beauty company of a machine that painted your nails. So I had all this going on. I was 24 years old. My dad said, quit your job and work on those two. So I said, okay. So I talked to my best friends and I said, hey, I think I'm going to quit my job and work on both of these things. And they said, no, because none of us are quitting our job to work on this. You can work on it on the side like we all are. Just do the fund full time. So I did that. I basically convinced 2 women to give me a little bit of starting capital. So I started with $2 million US in April 1st of 2021. And what's been 4 years now, and we're at just about 15 million. And my goal was that in 3 years we get to 10 million, which I had hit. And I sometimes can't even believe that it works this way, but I know the principles. I've grown up watching my dad do it. I've heard every investor who started with 2 million and now manages $1 billion or 2 billion or 10 billion, and it's a 30-year journey. It takes that long. And I just decided, okay, let's start at 25. Year 10 will be 35. Then I can have a kid or two. At least we'll have the beginning tough parts convinced. But the first month, from the first 9 months, interested investors asked me the craziest questions because I didn't have any real track record to show, right? You can't really show the returns on your personal account because you have a salary coming in, so you're buying at random times. A fund is different because it's a locked amount of capital that you're investing and you're being judged every quarter with returns. There's an auditor who's checking that everything is legitimate and correct. So it's more appropriate. After year 1, it got easier because I had 1 full year of returns. They could see there was disclosed statements of what we had bought and sold and what mistakes we had made. And I started hosting annual calls with my investors and interested investors. So it became easier. So every year that goes by, anyone who's interested in investing can see the last
3 years, 4 years.
4 years of returns, right? And they also can look at 90-minute transcripts of how I answer questions and how I think about investing and how I'm changing in that short amount of time. And, sometimes they ask me, what's a mistake? And I'll explain the mistake. And the next year I'll say that was not a mistake. It was correct. And we bought it again. And they can see the transformation. So I think that gives them a lot of comfort. So I think if you're a young person, a young boy or a young girl, keep some kind of written track record. So it doesn't need to be number-based. It can just be how you think. So even like a Substack with some written thoughts, someone who's interested in investing with you, they want to learn about you in a way that's comfortable for them. So yeah, they may get on a Zoom call with me or we'll get coffee, but they'll feel like they're being sold to, right? What they want to do is they want to learn about you when they're comfortable. So I think the reading about you, reading how you write, how you think, gives them a good idea of, okay, this is, gives them more comfort. So I think that's the one advice I can give is just start writing investment pitches and posting them. And there's some really cool online resources or online websites. Value Picker is really nice. So I think if you're in India, like posting on Value Picker and building a recognizable name would be great for any young investor in India.
So you kind of build your social capital, which might translate in the luck.
Yes.
And I understand that you want your LPs to learn about you.
Yes.
Or anybody who's, your friend or someone,
Yes.
to learn about you when they are comfortable.
Yes.
And nobody wants to get sold.
Nobody, even when I meet with a promoter in India, I don't like being sold by them, right? So I also do all my homework before. I read all the annual reports. I read their shareholder letters. I look at their interviews and I learn about them in a passive way. Same way. I think any LP, when they invest in a fund manager, is doing the same kind of homework. What I love about all my investors, they all invest on their own. They all maintain their own personal accounts. So sometimes on the call, we'll talk about those investments. So it's also just like a fun friendship I have with them too.
Is there any awkwardness is asking for money?
I don't ask for money.
Okay. Then?
They come to me.
Mm-hmm.
So in the US, there's certain funds structures where you can't advertise. All you can do is take inbounds. So I just take inbounds. More recently, I created a new fund where I can advertise, but then once people want to invest, we have to do way more verification checks. So I make that clear. I don't think I've ever gone to somebody and asked for money. I think what I see it as is someone reaches out to me saying, hey, this is an interesting topic, or this is an interesting fund, would love to learn more. I give them the access to letters and I let them ask me questions when they're ready. So sometimes people ask me on the call, so someone will invest in the fund and then they'll tell their family, talk to her. So, they'll get on the call with me and they'll tell me, convince me. I tell them, my job is not to convince you. This has to be something you totally believe in because we're going to see crazy volatile years. We have no guaranteed return on investment here. I can tell you my goals and my process, but I can't convince you. So I don't see it as convincing. I just see it as like doubt clearing.
Very interesting. So somebody comes to you with a belief and then,
Yes.
you can just solve doubts for them.
Yes.
Very
All
interesting.
my investors love Warren Buffett and Charlie Munger. So it makes it easy. But if someone doesn't love them, then they're confused what I'm doing. So then I can try to convince them, but it won't translate well. And it's actually really funny. I have a really close friend from growing up and I was talking to his mom and she said, what's the guaranteed return? I said, there's no guaranteed return. It could be negative 70% every year. She looked at me horrified. This is how you're pitching? I said, this is how I'm pitching. I'm super clear about how volatile this can get.
All your investors love Warren Buffett, right?
Yeah.
And I know because, you went to lunch with him when you were 12, right?
Yes.
What is something that you believe that about Warren Buffett that has not translated into all the books that have been written about him, but you have picked it up from the stories, from the lunch, which nobody has understood?
No, I think everything about him has been put online. I think the person who's a little bit more that people don't know as much about is Munger. But I think both Buffett and Munger have put so much of their time in the public domain that I don't think there's anything like I picked up on in private with him that's not on the internet. And this is actually what I think about a lot with when I'm with my dad and we meet other value investors and whatnot. The conversation is not so much about investing. It's more casual where maybe we'll talk about a company or two. But what they put in the public domain in a podcast or in their letters is so much more enriching. I've learned, even with my own father, I would say what I've learned from watching his videos versus what I've learned in the home. I think the videos carry a lot more wisdom. I think what he's taught me in the home is how to be a good parent. Right? I think that's what he's been a great role model as a good parent. and a good human. But I think as a investor, I've learned more watching his podcast. I think that's anyone, and I think the internet is a powerful thing because anyone who watches a lot of YouTube can learn a lot.
No, thank you so much
Yes.
for doing this.